So, guys, we are live. Am I audible to you? Am I visible to you? Okay, perfect. So, my audio is audible to everybody, my video is visible to everybody, and with that, we start. So, hello, everybody. Welcome to the CA Final Direct Access and International Taxation Live English Power Batch. I hope you all are doing really, really well. Let me know from your end so that we can start off with today's session. Sir, till yesterday, we had completed IFOS, including all the question answers. Okay, honestly, we did all the question answers even till yesterday. I had given DPQs, which most of the students have said. I must say, many students have said. Many students are yet to send. So do send your DPQ. Okay. We have with us Kishore, Kevna, Neha, Vaishnav, Harish, Anjana, Thiru. We have multiple people joining. If you are joining, do like the video so that others may note that this video is good video. So other people can also join. If you have not enrolled for the batch, do consider enrolling because today will be the last session on this app on this on YouTube. From tomorrow, we are going to shift on the fast app. Link must have been sent to you. If not, it will be sent to you by today. Do the necessary arrangements, whatever they ask, whatever the app is required to be downloaded, do download that. And tomorrow we will start. Remember, do not panic if you do not receive. We can delay the tomorrow session to some later hours. If not, I can also take tomorrow session on YouTube if anybody did not receive the serial key. So you need not to worry at all. It is just going to be a positive session. We have to continue on the app also with the same positivity the way you are coming here. So, chapter number 4, profit and gain arising from business and profession. Can you all make me recall what was the charging section of capital gain and IFOS? Yesterday only we completed IFOS. Can you all make me recall what was the charging section for capital gain and IFOS? What was the charging section? Can you all make me recall? Sir, charging section for capital gain was 45.1. Charging section for capital gain was 45.1, whereas for IFOS it was 56.1. Similarly, PGBP has a different charging section which says section 28, and section 28 lists down certain things which are taxable under PGBP. So it is least likely to be asked, but we must be aware of everything. What does these points say? Try understanding this. Any gain arising from business or profession carried on by the assessee during any year? Already liked, sir. Perfect. Thank you so much. Karnika. Okay. Karnika, hello. Seeing you for the first time. Okay, perfect. Any gain. See, if you do any kind of business, see, whatever is not necessary now, I'll just be a bit fast in that. I'll not skip out anything, but I'll be fast. If you do business even for one day, even if you do profession for one day and you earn some profit, that profit is taxable under that PGPP. That means business done or profession even for one day, it will be taxable under that PGPP. Remember, if partnership firm pays any interest or remuneration to a partner, remember this interest and remuneration is taxable in the hands of the partner, but it is not taxable in IFRS or salary, it is taxable under that PGPP. Remember, whatever interest that has been received by the partner is taxable under PGPP head. It is not taxable under salary. It is not taxable under IFRS. It is always taxable under the head PGPP. How it will be taxable? We will discuss this in AOP for AOP taxation. Oh, sorry, firm taxation. That is the next chapter. We need not to worry about this. Any interest, salary, commission received by the partner from the partnership firm, to the extent it is allowed to the firm, will be taxable under PGPP. Any amount received on Keyman insurance policy. Yesterday only we studied. In IFS, we studied that if companies like Reliance does scheme and insurance for their key managerial person, for example, Mukesh Ambani, whatever proceeds are received are taxable under PGBP. But if same key man insurance policy is done for a third person like Narendra Modi, like Dhirubhai Ambani, then in that case the proceeds would be taxable at IFOS. So that is why the major component goes to key man insurance policy, goes to PGBP. Yesterday only we understood. Normally, whenever anything is given as key man insurance policy, you have to tax it under PGBP. But once in a lifetime, it is being asked that it is taken for third person, then it would go to IFOS. Sir, simple. Chill point. If you receive any kind of grant subsidy from the central government relating to business and profession, for example, I want to start a semiconductor business. Because of its central government gave me a grant. Provision says such grant, such subsidy shall be credited to P&L, that is your business proceeds. Simple point, simple point. Any perquisite benefit received on account of business and profession, whether convertible into cash or not. For example, like my father is a retail sell. I mean, he has a retail shop. My father sells the product of Hindustan Unilever, Marico, Parle, multiple products he sells. One day Hindustan Unilever gave my father an offer. Hindustan Unilever said, sell the goods of 5 lakh rupees in a month and we will give you a gold chain of 1 gram. What did Hindustan Unilever say? Hindustan Unilever said, sell the goods of 5 lakh in a month. We will give you a gold chain of 1 gram. Provision says this kind of perquisite, this kind of benefit, it is not a gift. Even though it is a gold, it is not gift. It is business relation, and this would be treated as business income. This would be treated as business PGBP. We have FMV of stock converted into capital assets. Sir, try understanding this. If we have a stock, for example, if we have a stock For example, if we are selling gold, we have with us Karnika. Karnikar, if I'm not mispronouncing your name, is it Karnikar your name or Karnika plus AR? Is it something like that? Assuming Karnika. Karnika is having a gold shop. Very beautiful going gold shop. I mean, people used to rush to her shop because she has very much good variety of gold. All of a sudden, she stopped her shop, and took away all the gold for her personal needs. She said, I want to use this personally. Why everybody would take benefit of my gold? Why not me? She took away all the gold and did not sell any gold from then. She took away all the gold. Oh my dear Lord, she took away all the gold. Provision says, whenever a stock in trade is converted into capital asset, the FMV as on the date of conversion would become PGBP for Karnika. Oh. Normally in capital gain, we understood capital asset converted into stock in trade. Here we are doing the reverse thing. Stock in trade is converted into capital asset. Provisions would remain same. When capital asset used to convert into stock in trade, we used to check the day, we used to check the FMV on the conversion date. And this would enable us to calculate capital gain. Similarly, when stock in trade is converted to capital asset, we have to check FMV on the date of conversion, and this would enable us to calculate the PGBP. Perfect, perfect, perfect. Beautiful, beautiful. Vaishnav. Beautiful, Neha. Karnika, please let me know whether I am pronouncing your name correctly or not. If we receive any kind of export incentives, for example, cash assistance. What does it mean by cash assistance? If I sold goods of rupees 1 crore rupees, government is going to give me 1 lakh rupees of assistance. Duty drawback, whatever customs that I have paid, I am getting refund of that customs. Or import entitlements. What are import entitlements? Try understanding this. See, for certain products, we have a limited import entitlements. For example, if I have a business of manufacturing, say cars, I can only import 10,000 kg of carbon in India. I have this much entitlements. I can only buy 10,000 kg of carbon as of now. This is import entitlement. See, for some products now, we have limited allowability to import. We have limited allowability to import. Not we cannot import unlimited. No, we have certain products can be imported in limited format. Provision says, for example, Rahul is given a entitlement to buy 10,000 kg of carbon from any country. I did not buy 10,000 kg of carbon. I just bought 5,000 only. And remaining 5,000 entitlements I sold to Vaishnav. Now Vaishnav is able to buy remaining 5,000 of the products. Provision says these are import entitlements, and any sale of this import entitlements is also PGBP. One day I was teaching well. I was teaching well, Normally cash assistance by government only is considered, Neha. Anybody giving cash assistance? No. Normally cash assistance is given by normally government only. But yes, if anybody else also gives, na, it is also PGBP. It will also become PGBP. Na. You are getting it because of business relations, so it will also become PGBP. Yes. I was teaching so well. You know, one day, what happened? I was coming up with a batch, and that batch clashed with Sarthak sir's other batch. I was I was coming up with a live DT batch for May 26, but it was the sadness of the moment that that batch timing clashed with audit's batch. Sarthak sir went very angry. What happened? All the students who were doubtful to pursue whether DT or audit came to DT. For example, there were 100 students who were supposed to enroll for either of the batch. Everybody came to DT, nobody went to audit. Sarthak sir became very angry. Why did I choose the same time? Why did I took all the students? Sarthak sir was very angry. How do I tell you? He was very angry. He gave me 10 lakh rupees and said, do not teach now. Leave teaching. Because this way, the way you are teaching, you will take away all the students. He was very angry with me. He says, the way you are teaching, you are going to take away all the students. He took me 10 lakh rupees and asked a promise that I don't have to teach at the same time. Whatever time Sarthak sir chooses, I am not going to use the same time for teaching. Provision says, is this taxable under PGVP? Right answer is yes. So, in last chapter in IFOS capital gain, you have assumed that I am an employee at Fast. For this entire chapter, assume that I am a working professional at Fast. Okay, I'm not an employee in this case. I am a working professional. Okay, whatever remuneration I receive is covered under 194J. Assume for this chapter. So, Sarthak sir gave me 10 lakh rupees for not teaching DT. Provision says this is the kind of non-competition fees and taxable under PGBP. Perfect. Perfect. Any non-competition received or non-competition fees received for not carrying out business is taxable under PGBP. But my mind went psychic. I was very angry with sir. I was saying, how could you do this to me, sir? How could you do this to me? How could you do this to me? I was very angry. I was crying out loud in the corner. What did I just do? I announced the secret of fast. Of course, every institute has certain secrets. How do people get rank here? How we prepare books? How we prepare question banks? How we prepare ABC analysis? I leaked every secret. I was leaking every secret. How do we cater to students with such satisfaction? I started leaking this secret. He became very angry. Sarthak sir again paid me 20 lakh rupees for not leaking the secrets of the fast. Provision says this is also considered as PGBP for me. This is also considered as PGBP for me. If I am given some money for not doing business, it is also PGBP. If I am giving some, if I am given some money for not sharing any intangible, any secret, any intangible with anybody, then too it is also called PGBP. I know the secrets about fast. how ranks come, how books are prepared, how this beautiful question bank is prepared, how these batches are taken, how do we teach in so much depth. I know these secrets. I started leaking this secret. Sarthak sir went very angry. He paid me 20 lakh rupees. Provision says any money received on account of not sharing or non-sharing of intangible asset, just this money is just given to keep my mouth shut. That money is also taxable at PGPP. Oh wow, sir. We did not think of it that way. Any money received by the trade association from the members of the specific service, I want you all to hold this point for some time. We will study this tomorrow. Explanation. What does this point say? For example, I have a business of renting out house property. Remember, Neha says, sir, but you both under the same institute, then working professional kaise hoga? Why not? Many doctors work at a hospital. They are not employees of the hospital. They work on a professional basis. My duty is just to teach a batch and go. It is possible, na? I don't work here full time. I just work here. I just take batches and just go. I'm not bound by uh, bound by the timelines. Employees at the institute come at 10 a.m. but leave at 5 a.m., 5 p.m. or 6 p.m. But I work from 6:30, sometimes at 10:30. So rules for employees might be different. Rules for professional might be different. I can be a professional. Doctors are professional at many hospitals. Even many faculties are professionals at ICI. Every faculty that goes to ICI are professional. Part-time faculty also, I don't think that is the part-time faculty is not the reason, but yes, there are many people, many professionals who join organization as professional rather than just being at employment. They join organization as a professional. Yes, 194J applicable. Yes. Listen. If we have a business of letting out, if you have house property and you let it out, whatever income you earn will go from income from house property. Whenever we have house property and we let out such house property, provision says that income would go to income from let house property. Perfect. But if you have business of letting out of house property, whatever income we earn would go to PGBP. That answer is hold. Provision says if you have a business of letting out of plant and machinery, letting out of house property, residential house property, you have to check whether you are letting out residential house property, or commercial house property. Provision says if your business is of letting out and you let out the commercial properties, then in that case it would go to PGBP because your business is of letting out, business is of renting out. But even if your business is of renting out of house property, residential house property would always be house property only. It would not go to PGBP. What did I just say? Normally, whatever business I do, it goes to PGBP. If I have a business of letting out of house properties, provision says residential house property would still be house property business. It would not be PGPP. Whatever commercial properties I let out, it would go to PGPP. But if whatever residential house properties I let out, provision says it would still go to house property. This is an amendment applicable for amendment applicable with effect from May 25 only. So it might be tested in one of the big question. So speculative business, understand the layman, the meaning for speculative business is intraday business. If assessee has an intraday business, it is called speculative business. Intraday is always speculative. This is the layman language, layman term, layman meaning of the speculative business. In fact, actual meaning of speculative business is doing a business without taking physical delivery of the assets. For example, I bought some shares and I sold them without taking delivery. If you remember, if you know share market, what happens if you buy shares today and these shares get credited to your demat on the next day? Without getting these shares credited till the next day, I square off these position on the same day. This is called intraday trading, where no physical delivery of the shares is received. This concept is speculative trading. Remember, layman term, intraday trading is speculative. But in technical term, if you ask, buying and selling of securities without taking physical delivery, buying and selling of commodities without taking physical delivery, these things are called speculative. For example, if I am buying pulses, I bought the pulses. Before taking delivery, I sold the pulses. This is also speculative. But sir, it has certain issues. Speculative trading implies intraday trading of shares and commodities. Purchase and sale of shares or commodities without actually taking delivery or the transfer of the shares of commodity is called speculative. But sir, here an issue arises. For example, if somebody does some kind of hedging work, or somebody does some kind of a safety work for their pulses, for their raw materials in commodities, then it is not considered as speculative. It is given an exception that even if you speculate on account of hedging of the raw materials or shares, then it is not speculative. Second thing, if you do forward contract imply, for example, if I have to pay dollar after 10 months, so I have fixed the price of the dollar even right now only. I have fixed the price of the dollar after 10 months. Provision says forward contracts are not speculative. Even if you are not taking physical delivery right now, even if you are going to just square it off later on without taking delivery, it is not considered as speculative. Normally, without taking delivery implies speculation, but forward contracts are not speculation. Third point, any trading in derivatives on recognized stock exchange. What does that mean? Buying future and options, selling future and options, these are not speculative. F&O are not speculative. Remember, F&O is not speculative, it is a regular business. And last, if you do any kind of commodity derivative trading, for example, you do derivative trading, future and options in case of commodities, for example, pulses, for example, any such spices, if you do any kind of trade, derivative trading on these commodities, these are also not considered as speculative. Remember, you must have paid commodity transaction tax when you do the derivative trading, but commodity transaction tax is exempt in case of agriculture commodity. What did I just say? Speculative business imply a business in which you don't take delivery of the goods and buy and sell the goods. But there are four exceptions. First of all, raw material hedging for commodities and hedging of shares. Second thing, forward contracts. Third thing, future and options contract. Fourth one is derivative trading on commodities where CTT is paid. These four are exceptions. Otherwise, apart from these four, every buying and selling without taking delivery would become speculative. Remember one thing, why do we consider speculative business? Because whatever the losses of speculative business are cannot be set off against any other business except for speculative income only. Just because of losses only, we separate the speculative business, because whatever losses arise on the speculative business can be set off against only speculative income. Got it? This is the only important point. Need not to stress this much. We have Kishore who says that after this amendment, commercial properties like mall and hotels, if rented, this should mandatorily be considered as PGBP. Not mandatorily, but if your business is of if your business is of letting out, then it would be PGBP. But if my business is not, I had a property which was owned by my greatest grandfather, and now because city has evolved, that property has turned into the prime area. I constructed the mall and I received the rent. My business is not of renting out, but I have a single property which is rented out, so it might not be PGBP. It is not mandatorily PGBP. Sure. It is not mandatorily PGBP, but it might be PGBP, it might be house property, depending upon is it your business to let out or not. How to compute PGBP? Provisions section number 30 to 43 would tell. 29 says how to compute PGBP. In answer to that, section 30 to 43D would answer how do we compute PGBP. Section number 30. If you have a building on which you pay rents, you pay rates, you pay taxes, you pay repairs, and you pay insurance. If you have a building, you pay rent on that building. You pay repairs, you pay rates, you pay taxes, you pay insurance. Would that expenditure be allowed to you? Provision says if you pay rent, it is allowed. If I have a building taken on rent and if I pay rent, will that expenditure be allowed in business? That is allowed. So what is mean by allowed in business? Allowed in business imply whether while computing income tax, deduction of such expenditure would be given to us or not. So it would be given. Rates and taxes. allowed to us. Sir, what is difference between rates and taxes? The taxes is the term used in India. Rates is the term for such taxes in abroad. So people may not confuse. Rates and taxes are the same thing. These are nothing but taxes, but rates is used taxes is used in India, but rates is used somewhere outside. If you do repairs, any revenue repairs would be allowed, but if you do capital repairs to the building, it is not allowed. It is added to cost. And at last, if you pay insurance, it is always allowed. My question to all of you: if I own a building and I had paid rent to myself, will that rent be allowed? If I own a building and if I had paid rent to myself, will that be allowed to me? Will that be allowed to me? What, Kevina, what IFOS you are saying? What IFOS you are saying? I did not get. If I had a building, I pay rent to myself. Will that rent be allowed? What is your take according to you? What is your take? Sir, what sense does it make? If I am doing a business as a proprietor, can I pay rent to myself? Of course not. How can it be allowed if I pay rent to myself? How if I pay salary to myself, will that be allowed? Arey Baba, what sense it makes? I am taking salary out and again taking giving salary to myself. Will that be allowed? Does it make any sense? No, sir. So remember, if you are the owner, then rent paid to yourself is not allowed. See, when I was in articleship, na, I used to see this happening multiple times. People doing proprietary business used to give rent to themselves just to divert their business income to PGBP. People used to give salary to themselves just to divert their business income to salary, income to salary. So we used to correct them. It is not allowed. It is not allowed. You can give rent to your brothers, you can give rent to your sisters, but not to yourself. Got it? Okay, now we have plant and machinery. If you have any plant and machinery, you pay rent on that plant and machinery. It's allowed expenditure. If you pay repairs to plant and machinery, of course, revenue repairs would be allowed, but any capital repairs would be capitalized in the cost, so it wouldn't be allowed. If you pay any insurance, it is allowed. Sir, we don't pay rates and taxes in plant and machinery. Arey Baba, rates and taxes in plant and machinery are not allowed. These are we don't pay even rates and taxes now. For land or building, we have municipal taxes, we have multiple kinds of water taxes. But in plant and machinery, we don't have any such taxes. Once you buy plant and machinery, no taxes are required. Remember, if you pay rent to the partner, it is also allowed, but it has to be reasonable. Why? I will tell you later. Rent paid to any other person other than owner is allowed. Important section number 32, that is depreciation. Anybody having any doubt till now? Anybody having any doubt till now? First of all, no. If it is not my business and I have rented out the mall, will it be considered as IFOS? Okay, okay, that was the point you were asking. Which point you are considering? Okay, okay, got it, got it. Hmm. Mm, no, it will still be house property. If you are letting out commercial premises, na, it will still be house property. Even now, if you have commercial premises being let out, it will still be house property. House property does not mean residential house property. House property imply every building that is appertinent to land is house property. So whether it is residential, it is commercial, it would go to house property. If it is not your business, it won't go to IFOS. What is depreciation? First of all, in income tax, we have different method of calculating depreciation. Whatever depreciation you are calculating as per Companies Act or any other act has to be disregarded, and this depreciation as per income tax would be allowed. Agricultural commodity trading. Naresh, is it speculative? Agriculture commodity derivative trading. If you are talking agriculture commodity trading, is it speculative? Trading is not speculative, first of all. Agriculture commodity derivative trading, if you're speaking, it is also not speculative. It is also not speculative. What this point says, Naresh, this point says that especially agriculture, sorry, This point says agriculture derivative commodity trading, even if you do despite of not paying CTT, normally CTT has to be paid, commodity transaction tax has to be paid. But in on agriculture derivative commodity trading, even if you don't pay CTT, it would still become exempt from speculative. In this case, exemption from CTT is given to you. This is what this point says. Getting back to depreciation. First of all, whatever depreciation is computed as per Companies Act has to be disregarded, and whatever depreciation is calculated as per Income Tax Act has to be considered. Second thing, do I have a choice of calculating depreciation? Right answer is no. It is mandatory for me to calculate as per Income Tax Act. Can I forego my depreciation? Right answer is no. You have to charge it. You have to charge it. Sir, I don't want to charge depreciation. I want to offer higher income. Not allowed. You have to charge depreciation. That is a mandatory charge. Third thing. As per Income Tax Act, no depreciation is given on land. No depreciation is given on any kind of financial instrument or any goodwill. It is not given to you. Financial instrument, like if you have debtors and you want to claim depreciation on that, not allowed. If you have investments, you want to claim depreciation on that, not allowed. Depreciation can be only claimed if asset is used for business purpose. It can be actively used or it can be passively used. Or SSC and SSC should be owner or beneficial owner of that asset. SSC should be owner. That means if I have machinery, I can claim depreciation. But I can be beneficial owner of that asset also. For example, hire purchase or for example, leases. For example, I have a mill. Rahul has plant and machinery. This plant and machinery has been leased out to somebody called Kevana. Has been leased out. Now, since I have paid money to acquire this property, I am the beneficial owner of this house. I am not the right now. I'm not. I might not be owner because I have given this property to Kevana on lease. But I am the beneficial owner now. Provision says if property is given on lease now, the person who leases out is called lessor. Of course, lessor claims the depreciation, and the person who received on lease is called lessee, and he is not allowed depreciation. Not depreciation is not allowed. Rather, only deduction that the lessee gets is the lease rental. Of course, Hevana would be paying lease rental now, so lease rental would be given to her as deduction. But for owner, that is the lessor, depreciation would be given to her. Correct. In case of lease agreement, I told you who claims the depreciation. In case of leases, depreciation is claimed by lessor and rent expense is claimed by lessee. This is what beneficial owner means. Owner implies I have paid the money and I own that asset. Therefore, I can claim depreciation. If I don't own the asset, I have given this asset to somebody else on lease, but I have paid money to acquire that asset. Provision says this would also entitle you to claim depreciation. Sir, in income tax, we do not differentiate between operating and financing lease. Whether you have given this asset in operating lease or in financing lease, we do not differentiate. We will give you depreciation irrespective of that. Lessor is going to claim the depreciation in every case. Sir, under Income Tax Act, depreciation is given when asset is put to use. You bought that asset is kept aside in the almirah, not necessary, you won't get depreciation. Only and when the asset is put to use, you get depreciation. But sir, in case of standby equipment, in case of fire extinguisher, in case of machinery server, depreciation is allowed from ready to use. Just let me tell you one example. For example, I have a camera in front of me, because of which you all can see me. I have a backup camera kept at my drawer. The backup camera that is kept will never be used unless this camera is broken or this camera is of poor quality. Provision says, won't I get depreciation of that standby equipment? Provision says, yes, of course, standby equipments are kept for site purpose. Now you can claim depreciation on those assets also. Second thing, if I have a fire extinguisher at my home, it's always kept. It might never be used. Does that mean I'm never entitled to claim depreciation? Of course, you are entitled now, because fire extinguisher are not meant to be used unless of emergency. So in fire extinguisher, you are allowed depreciation when it is ready to use, not put to use. And in case of machinery server, also you are allowed depreciation when it is ready to use and not put to use. Remember, if asset is being owned partly, then depreciation on such partly owned assets can be allowed. What does that mean? For example, If I have a plant and machinery and my brother also uses the plant and machinery, provision says only the portion that I am using. That means if I am owning if I am owning that machinery 50%, then 50% of depreciation can be only claimed by me. If I own asset partly, then whatever portion I hold, that only depreciation I can claim. What did I just say? First of all, sir, it is a mandatory charge. No depreciation on goodwill, land, financial instruments. Sir, for depreciation to be claimed, you must use that asset actively or passively in business, and you must own or you must beneficially own that asset. Last thing, it is only given when it is put to use, but in there are certain cases, for example, fire extinguisher, we have standby equipments, machinery servers in which depreciation is allowed when these assets are ready to use. That's it. Of course, huh? The limited portion that you use will only entitle you the depreciation. Okay. If you use 50% of the assets, only 50% depreciation would be given to you. Now we have point number A to F. 5 or 6 pointers we have. Five A, B, C, D, E, and F. Every point talks about different aspects of depreciation. I would go one by one. Do not get lost in the topic. Okay. Rates as per Income Tax Act. My understanding, under Income Tax Act, what do we do? Whatever assets are there, we have made four classes, four buckets. Class one is of buildings. Class two is furniture. Class 3 is plant and machinery, and class 4 is intangible asset. All the assets that we see in the income tax have been categorized into four categories. It can be either building, it can be either plant and machinery, it can be either furniture, it can be in the intangible assets. Only four classes. Within every class, we have distributed into different blocks. For example, building can be residential building can be commercial building can be temporary building. Plant and machinery can be important plant and machinery can be normal plant and machinery. We have determined into different blocks. And within blocks, we can have multiple assets on which we do not differentiate. These blocks are buckets in itself. Whatever assets we buy now, we just put that into bucket. And we claim depreciation on the entire block. So therefore, in Income Tax Act, we use block of asset system, not the individual asset system. Here we do not account for individual asset, we account for entire block. Got it? We we here account for entire block. We do not identify any individual asset. Whenever an asset is bought, whatever the price at which it is bought, it is just added to the block of asset. Whenever asset is sold, only the portion that is being sold is reduced from block of asset. Nothing else is done. Sir, got this point. Now, what is the actual rate? What is the actual rate of each block? I am about to tell you. Try reading it with me so that you are able to recall, you are able to learn it. First class, as I said, building. And first block of that building is residential building. If you have any block of residential building, it would be depreciable at 5%. If you have any block of commercial building, general building, other building, any building in which no purpose is mentioned, provision says it is depreciable at the rate of 10%. And third block says temporary structure, wooden structure. You must have seen wooden structure being made at army premises. At many business premises, wooden structures have been made. They are depreciable at 40%. So what did I say? 5% for residential purpose, 40% for no, for 40% for wooden structure, and any other building would be depreciable at the rate of 10%. Building is very clear. We have furniture. All the kind of furniture would be depreciable at the rate of 10%. Every furniture. So remember, if you have any electrical fittings, for example, wires that go inside the wall, if you have switches, electrical fittings, like if you have some kind of lights, you have some fans, provision says these are furniture only. Some switches on which you click on and off, these are also called, furniture. These are part of furniture. Every furniture is depreciable at the rate of 10%. Depreciation on furniture is flat at 10%. Flat at 10%. Plant and machinery. Third block, third class, plant and machinery. Plant and machinery has broadly three blocks. First block is high-end goods, which are depreciable at 40%. Sir, what are those high-end goods? First of all, aeroplanes and aero engines. Aeroplanes and aero engines are the first block. Aeroplanes and aero engines, what does that mean? Big aeroplanes and aero engines, they are depreciable at 40%. If you have any computer and computer software, these are also depreciable at 40%. Remember, computer parts are also depreciable at 40%. For example, if you have UPS, you have scanner, you have printer, these are also depreciable at 40%. Books and annual publications. See, for example, if you remember, if you have income tax act, if you have income tax act bought at 2000 rupees, every year you buy income tax act at 2000 rupees, these are depreciable at 40%. If you have pollution control devices, these are depreciable at 40%. If you have renewable energy devices like solar panel, these are depreciable at 40%. If you have medical equipments, these are depreciable at 40%. For example, you are in a factory and you have a machine to measure the blood pressure, you have machine to measure the diabetes, these are medical equipments, these are depreciable at 40%. What six things did I say? What six things did I say? Sir, I said first of all, aeroplanes and aero engines. Second thing, computer and software. Third thing, books for annual publication. Fourth, renewable devices. Fifth, pollution control devices. And sixth one, medical equipments. All these six assets are leviable for 40% depreciation. We can be having ships, vehicles, motorboats, boats. These are depreciable at 20%. And last part, other plant and machinery. Every other plant and machinery is depreciable at 50%, 15%. These other plant and machinery can include motor vehicle, can include oil wells, can include office appliances, can include mobile phone, can include EPA, BX, and all the other plant and machinery fall under 15% category. Now you must be thinking, what is EPA, BX? EPA, BX are nothing but telephones. If you remember, we used to have a big telephones, and you used to dial by making circular movement of your fingers. You used to dial. You must have seen this in old movies that people used to dial by making this round and round. So these were called EPABX, and these are depreciable at 15%. Sir, we did not understand this. Laptops at 40%, and mobile phones at 15%. Yes, this is how it is. Laptops are used more of for commercial purpose, and they are used for more number of hours, so they are more depreciable. But if we have mobile phones, they are useless. They are used for less number of hours. They are used for normally personal purposes. So these are depreciable at 15%. Sir, what about iPad? If we have iPad, how much depreciation is it going to charge? See, iPad is not considered as laptop. iPad is considered as extension of mobile phone only. Therefore, it is depreciable at 15%. Sir, we got this point. We got the point. We got the point. Intangible assets are being depreciable at flat 25%. Sir, there are certain special cases in case of plant and machinery. What are those special cases? In case of motor vehicle, you have a normal business. You have a normal business. For example, you have business of garments, footwears, apparel. You have normal business, and you use motor vehicle. You have motor vehicle in the business. Provision says that such motor vehicle would be depreciable at 15%. If you have a motor vehicle in a business, then such motor vehicle is depreciable at 15%. But remember, if you bought this motor vehicle after 30th August 2019 to 31st March 2020. That means within 6 months, if you bought this, you can claim depreciation at the rate of 30%. 15% normally. But if you acquired plant and machinery within this small window between 2019 to 20, 30th August 2019 to 31st March 2020, you will be entitled to 30% depreciation. Remember, if you have motor vehicle used in renting or hire, if your business is of renting or giving motor vehicle on hire, for example, I have bought cars and I give these cars on rental basis. Provision says normally depreciation is 30%, but if you had bought this motor vehicle within the small window of 30th August 2019 to 31st March 2020, then depreciation at the rate of 45% would be given to you. Not special, but once in the rarest case it has been asked, it can be again asked, so it's okay to remember. If you have windmill or related equipments. Earlier, it was covered when it was under BJP government, then 15%. Sorry, when it was under Congress government, it was depreciable at 15%. But as soon as BJP government took power, it is taxable at it is depreciable at 40%. Sir, these were the rates. I am right. I am just making you recall these rates. Try speaking after me. Try speaking with me. Try speaking with me. Okay. Listen, listen, listen. Have a look at the screen. Try speaking with me. These depreciation rates are to be learned. This is not an exception. You have to learn these depreciation rates. Sir, first of all, we have residential building depreciable at 5%. We have other building depreciable at 10%. We have temporary structure depreciable at 40%. We have furniture that is depreciable at 10%. Furniture includes electrical fittings, it includes switches, it includes wires. Then we have plant and machinery. First block of plant and machinery fall under 40%, which covers, sir, aeroplanes, aero engines, software, computer devices, and related equipments. We have books and annual publications. We have renewable, we have pollution control, we have medical devices. Then we have 20% plant and machinery, which includes all the motor vehicles, speedboats, boats, vessels. Then we have 15%. We have normal plant and machinery, which includes oil wells, which include mobile phones, which include EPABX, which include motor vehicle, which includes all the other plant and machinery. We have fourth asset, we have intangible asset, which is depreciable at 25%. Remember, in plant and machinery, we have two special cases. If we have motor vehicle, if you have motor vehicle used in regular business, normally 15%. But if this motor vehicle was acquired after 30th August 2019 to 31st March 2020, 30% would be given. And otherwise, if your business is of renting of plant and machinery, renting of motor vehicle, normally 30% is given. But you are given 45% if you bought this plant and machinery after 30th August 2019 up to 31st March 2020. 45% is given. This is the rates. Are you able to recall? Are you able to recollect whatever the rates are? Depreciation rates are. Yes, sir. Yes, sir. Absolutely, you are able to recall. Now take out your books, notebooks, write it with me. Write it with me. Maybe it has misprinted 20th, 23rd August 2019. I say 6 or 7 days. I don't think that would make sense, but I need to check this. To check. I'll check Anjana and let you know. I'll check this Anjana and let you know. Sir, we have buildings. We can have a residential building, 5%. We have normal building, commercial building, 10%. We have temporary structure, 40%. Or wooden, of course. We can have furniture, 10%. It includes electrical fittings, wires, switches. We can have plant and machinery. Plant and machinery can be or they're categorized into three categories. First one is 40% wala, which includes aeroplanes, aero engines, aero engines. We can have software, computer software, computers, including UPS, printer, scanner. We can have books. We can have medical equipments. We can have pollution control equipments. We can have renewable devices. These all are depreciable at 40%. We can have 20%. This can be motorboat, boat, vessel. And third, we have 15% which says normal plant and machinery. This can also include electric motor vehicle, mobile phone. This can also include EPA, BX. This can also include oil well. This can include others. Then we have intangible assets that are depreciable at 25%. In plant and machinery, we have two cases. First of all is motor vehicle, and we have the other cases windmill. In windmill, we have before 1st April 2014, there's 15%. With effect from 1st April 2014, 40%. Windmill plus equipment. Some windmills equipments are also depreciable at the same rate. Motor vehicle, we need to check. We have a regular business. Regular business normally it is 15%, but 30th August 2019 to 31st March 2020, 30%. If you have renting business, normally 30%, but 30th August 2019 to 31st March 2020, it is 45%. These are the rates. I am giving you 1 extra minute just to complete these rates. 1 extra minute just to complete these rates. 1 extra minute to complete the rates. Okay. Tell me when you are done. Do write these depreciation rates because at final level nobody asks you to remember rates. But I have been a personal victim of these tax rates. If you are not able to recall rates, you will mess up in exam. You are going to mess up in exam. Of course, you are going to mess up. Sir, done. Done. Sir, we are not even writing. Whom you are waiting for? Done. Oh, no, no, sir. We are writing. We are writing. That. I got the message. See, depreciation on assets will be allowed on block of asset. Once we are done with block, once we create block of all the assets. See, you are understanding the block. If we have, for example, one building, two building, three building, we will not identify different buildings. We will just pool these buildings and claim depreciation on the entire assets. How do we do that? Done, Harish, done, Anjana, perfect. Everybody did this. Perfect. It's great to see. How do we calculate these assets? Remember, for every block, you have to do the different calculation. For every block, you have to calculate. You can have 5% residential building as different block. You can have 10% other building as different block. You can have 40% building as other block. You have to create three blocks, and every block wise calculation you have to do. If you have seen tax audit, then you must have seen that we calculate at different block. Every block has to be calculated in this sense. How do we calculate? Take the opening written down value of the block. Add the assets purchased during the year. Add the assets purchased during the year. Sir, how do we add it? Provision says if you have acquired any asset during the year, add it into three parts. What are those three parts? First of all, if assets are acquired and put to use for 182 days, 180 days or more. If assets are acquired and put to use for 180 days or more, then they have to add it separately. If assets are acquired and put to use for less than 180 days, they have to add it separately. And if assets are acquired and not put to use, this is to be added separately. Three things are to be added. First of all, if asset is acquired and put to use up to 3rd October, 3rd October, 3rd October, 3rd October, 3rd October, 3rd October, sir, it is considered as used for 180 days. You will get full depreciation on this. If asset is acquired for less than 180 days, that means put to use after 4th October, on or after 4 October, then that means it is separate, it is considered separately. If it is not put to use, you won't get depreciation. Once you added all the assets, you have to reduce the assets sold during the year. You have to reduce these assets sold during the year. Selling price of the assets discarded, sir, done. Sold, done. Sir, for example, I had a machinery which was destroyed. I had a machinery which was destroyed and I received some compensation from the insurance company. Provision says in this case also you have to reduce the insurance amount, insurance receipts. Whatever insurance receipts you got, that is to be reduced. If you have any WDV, for example, I was running a business of Mama Rika, if you remember, slum sale. I had multiple assets. Some were in B2B business, some were in D2C business. There were some assets in one part of the business, some businesses, some assets were in the other part of the business. I had different businesses. All the D2C businesses went to third person. I sold this entity in entirety. I sold this second unit of the business to somebody else. So there must have been many assets that had gone, many assets gone. How do we reduce those assets in WDV? How much amount we are going to reduce from WDV? Provision says how to compute the WDV of these assets. Assume that these were the only assets in the block. For example, in the block, we had two plant and machinery. One plant and machinery in real life was from B2B business, and the other plant and machinery in our block was this from B2C business. And this must be appearing in your block as if total 10,000, total 1 lakh would be appearing. Of course, in block, every plant and machinery, every asset is clubbed in. So you might not be able to identify which assets have gone. So how do we identify? Consider this plant and machinery as if this were only part of the block. At what part this was acquired? This was acquired for 50,000 rupees. After depreciation, this must have been today at 30,000 rupees. So 30,000 has to be reduced from block. What I am saying is, see, it is possible that your block contains multiple assets and some assets have gone in slump sale. Now, if assets are going in slum sale, you are not able to identify what was the actual WDV of that individual asset. So provision says identify which assets go in slum sale, take the purchase price of that asset and depreciate it as if these were the only assets in the block. Whatever the WDV remains now, that is to be reduced from the block of asset. Are you getting this point? If we have multiple assets in the business and few of them go in slump sale, how do we identify that what was the WDV to be reduced? For that matter, you have to identify the assets that have gone in slump sale. Assume that these were the only assets in the block, depreciate them every year wise, and whatever the WDV would have been has to be reduced from WDV as of now. Got this point? Are Baba, did you get this point? Provision says after additions minus sales, whatever the figure comes out to be, this is depreciation. This is WDV available for depreciation. After opening plus additions minus sales, this would give you WDV available for depreciation. From this WDV available for depreciation, you have to reduce the depreciation and this would give you closing WDV. Now, how do you calculate depreciation? Provision says depreciation is always calculated in three parts. Depreciation is always calculated in three parts. What three parts? Provision says if you have not acquired whatever WDV turns out to be, what WDV available for depreciation turns out to be. If you have acquired and not put to use asset, you will not get depreciation on those assets. If you have acquired the asset and put to use for less than 180 days, you will get half rate depreciation. Half rate imply if the block rate is 15%, you will get 7.5%. If block rate is 40%, you will get 20%. If block rate is 20%, you would get 10% depreciation. And whatever the balance WDV remains, you will get full rate depreciation. Full rate depreciation would be given to you. Whatever the remaining WDVs, you will get full rate depreciation. Got this point? Got this point? Sir, got it. Sir, got this point. Sir, there is a provision. There is a provision. Neha says we are adding purchase but not put to use just for block computation. Yes, Neha. So do we so we understand what is the actual value of the block. Actual value would include na, the assets that are purchased but not put to use. But we will not get depreciation on that. If plant and machinery is acquired on 1st December 2024 and not put to use, not put to use, will I get any depreciation? The right answer is, sir, no, we will not get depreciation. We will not get depreciation. If plant and machine is not put to use, we won't get depreciation. Sir, chalo, noted, 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 duly noted. We got your point. What if plant and machinery acquired in current year, not put to use in current year, and put to use in next year for less than 120 days? Are we going to get 15% depreciation or 7.5% depreciation? How much depreciation we are going to get? How much depreciation we are going to get? Vaishnav says 15%. Okay. Neha says 15%. Anjana says 15%. And right answer is yes. Firu says 75, 7.5. And right answer is 15%. Why, sir? Why? Why this differentiation? See, this half a rate depreciation is only applicable in the year of acquisition. If you acquire asset and in that same year you put to use it for less than 180 days, then only half rate is given to you. But if you acquire asset in current year and you did not put to use in current year, you put to use in next year, and that too for less than 180 days, then in that case entire full rate depreciation is given, because provision clearly states that put to use and acquired and put to use, both the things has to be considered. If you have acquired an asset and put to use for less than 180 days, then only half rate is given. But if you acquire in this year, put to use in next year, even if you use it for one day, you will be given full rate depreciation. You will be given full rate depreciation if you acquire in this year, but put to use in next year. Even for less than 180 days, you will be given full rate depreciation. Sir, okay. Whenever you buy a plant and machinery, things has to be added to cost. Things have to be added at cost. Provision says if you have incurred any expenditure for installation of the asset, if you have any incurred any expenditure for installation or directly attributable expenditure, provision says that would be added to cost of the asset. What do I want to say? For example, I bought machinery for 100 crore and installation charges I paid 2 crore rupees. So amount added to block would be 102 crore. Whatever the direct expenses are, we have to consider. These all topics will be covered under 43.1. I will be discussing in, after half an hour, I guess, or 20 30 minutes. I'll be talking this. But we need to understand anything which has been directly incurred, any expenditure directly incurred has to be added to cost. Third thing, sir, a question to all of you. For example, if I have a building acquired for 10 lakh, WDV of this building is 4 lakh, opening WDV. I sold this building for 4 lakh, but stamp duty value of building is 20 lakh. What will I reduce from the block? What will I reduce from the block? How much value I am going to reduce from block? How much value I am going to reduce from block? Vaishnav says SDV. Okay. Anjana says 4 lakh. Okay. Neha says 4 lakh. Okay. Karnika says 4 lakh. Okay. Harish says 4 lakh. Okay. Kishore says 4 lakh. Right answer is yes, it has to be 4 lakh. Your stamp duty value, your fair market value is irrelevant. Your stamp duty value, Hiru says 4 lakh. Yes. Your stamp duty value, your fair market value is irrelevant. Why it is irrelevant? Because provision explicitly says reducing WDV would imply only the sales proceeds. If you sold that asset, even if you sold it for 1 rupee, you have to reduce only 1 rupee from the cost of asset. Of course, for capital gain purpose, stamp duty value will be taken. When we have to calculate the capital gain on this building, short-term capital gain would arise and capital gain would be taxed. Capital gain would be taxed for 6 lakh rupees. But for that matter, that is capital gain. That is capital gain. We are discussing how much value to be reduced from block. Block will be only reduced by the sales proceeds. Always sales proceeds. Sir, for example, I had WDV. Let's assume I have WDV. I have I have WDV and I sold it for 1 rupee. SDV is 10 lakh rupees. How much will I reduce now? How much will I reduce now? I sold it for 1 rupee. Now Vaishnav got the point. Sir, it might appear that we are doing wrong. It might appear reducing 1 rupee appears that we are doing wrong. because this is incorrect now. 1 rupee, I mean, this is not justified now. Value is 10 crore, I am giving it for 1 crore, it is not justified now. Sir, I am accepting your fact, I am accepting your fact, it is not justified, but this is not justified from capital gains point of view now. When we'll calculate capital gain, we'll consider SDV for the purpose of capital gain. But for reducing block, we will reduce only 1 rupee, and our block would turn 3,99,999. Our block would not, even though it will not yield us any depreciation, our block will become negative. So this depreciation would not make any sense. But still, for the purpose of reducing the block, 1 rupee would be reduced. I hope you got the point. Sir, two things we understood. What rates we have to calculation, what rates, with what rates we have to do the calculation. Second thing, how do we have to calculation? First of all, take opening, add the additions in three parts. Put to use for 180 days or more, put to use less than 180 days or not put to use. Reduce the sales price. Always remember, always reduce the sales price. If given for free of cost, reduce zero. If demolished, whatever the proceeds you receive, whatever the insurance proceeds you receive, that you have to reduce. After that, the WD would be given to you, available for depreciation. If not put to use, then zero depreciation. Put to use less than 180 days, then half rate depreciation, and balance WDV would be charged to normal rate of depreciation. What if capital assets are being sold? Try understanding this. I'm not teaching you anything. I'm not teaching you anything. I'm just taking the example that I have. I'm not teaching you anything. Just I'm trying to take the provisions out of you. I have two assets in my block. I have two assets in my block worth rupees 1 lakh rupees. I bought three more assets worth rupees 2 lakh rupees. This implies I have five assets worth rupees 3 lakh rupees. Five assets worth rupees 3 lakh rupees. I sold all the five assets at 4 lakh rupees. Wow, it is a profit. It is profit. Yay, we got profit. Don't you see it's a profit? Of course, it is profit. It is considered a short term capital gain. Don't you see your block becoming negative? That means you sold it at a higher price. That means that you have a profit. Sir, why short term? Why capital gain? I will tell you later. I will tell you later. But right now, did we get this point that it will be profit, and this 1 lakh would be taxable for us? Why short term? Why capital gain? I'll tell you. Don't worry. But is it clear? Yes, sir. It is clear. Now understand this with second example. We have two assets worth rupees 1 lakh. We acquired three assets worth rupees 2 lakh. This implies we have five assets worth rupees 3 lakh rupees. And all these five assets we sold for 1 lakh rupees. In Sindhi, we have a saying called Thukkatai. We show all the five fingers in the hand together and show this. We say Thukkatai. Athu wala point we say. How can you do business with this concept? You have five assets which hold value of 3 lakh rupees and you are selling at for 1 lakh rupees. How can you do this? This is how you are going to do business. You had assets of 3 lakh and you sold it for 1 lakh rupees. That means you are incurring losses. So 2 lakh will be short term capital losses. Is it something that I have taught you? This is something that you are already understanding of your own. I am not teaching you anything new. Now try understanding this example. If you have two assets worth rupees 1 lakh rupees and you bought three assets worth rupees 2 lakh rupees, that means now you have five assets worth rupees 3 lakh. You have five assets. Just think of it from this point of view. You sold two assets. Out of these five assets, you sold only two. You have three assets. But but these two assets have been sold for 5 lakh. Can you have a better profit than this? Can you have a better profit than this? You have five pencils. Each pencil is acquired for 1 rupee. and you sold two pencils at 10 rupees. Can't you have a better profit? Can you have a better profit than this? Of course not, sir. This is a 2 lakh and this is a gain. Now we are not with any WDV. We are not left with WDV. So whatever the profit arises, it will be short-term capital gain. Why, sir, short-term? Why capital gain? I will answer. You don't worry. But just understand this fact that we have got a profit. Profit understanding has to be there. The remaining assets are useless because we don't have WDV. We are left with three assets now, but we don't have any WDV to charge depreciation. So no depreciation will be given from here onwards. Now take this fourth example. We have two assets worth rupees 1 lakh. We bought three assets worth rupees 2 lakh. That means can I simply say we have five assets worth rupees 3 lakh rupees? Yes, we have five assets worth rupees 3 lakh rupees. Out of these five assets now, I sold two assets worth rupees 2 lakh. That means I'm still left with three assets. I'm still left with 1 lakh WDV. I am not able to calculate the profit or losses. I am not able to calculate because ultimately I don't know now what was the value, what was the actual value, how much the cost. I don't know anything. I'm just left with assets. I'm just left with WDV. Provision says here you don't have any profit and losses. This block would continue and depreciation shall still be applied. Therefore, provision says no capital gain and remaining WDV shall continue. Did you understand how sale of asset is accounted? How profit in on case of sale app takes place when WDV is exhausted? When WDV is either exhausted or all the assets in the block are exhausted, what happens in that case? Are you able to understand this point? Are you able to understand this point? What happens when WDV is exhausted or either all the assets are exhausted? Now, the only question that you have is, sir, why short-term capital gain? That means why short-term and why capital gain? First of all, don't you think that all the assets that you sold in the business are uh, capital assets? If you see the definition of the capital asset, first of all, every asset is a capital asset. Stock in trade has to be excluded. Movable personal assets has to be excluded. Rural agricultural land has to be excluded. Does business assets are your personal assets? Does movable assets are your these business assets are your personal assets? No. So therefore, these are not excluded. These are capital assets only. Therefore, capital gain would arise. Now, government wants to tax these things at the rate of slab. Whatever the normal slab rate applies to you, government wants to tax at the rate of slab. Now, government has short-term capital gain. Government has given you short-term capital gain, and government wants to tax this this capital gain at slab. So, which capital gain would be taxed at slab? Always short-term capital gain, na. Therefore, it is short-term capital gain. Regular wala. Government wants to tax these assets, tax these gains at slab rate. So how government can tax it at slab rate, making it short-term capital gain? That to accept other than triple one wala. Therefore, it is short-term capital gain, not PGBP, but short-term capital gain. Sir, now if I ask you to broadly understand what topic we are studying, just have a look at this. Capital gain or loss in case of depreciable asset. If all the assets of the block are sold, all the assets are sold, all the assets are sold. For example, I had five assets, I sold all of them. If I sold all the assets now, of course there has to be some loss or gain because I don't have any assets to charge W depreciation now. So either I must have asset or either I must have I must have assets plus WDV to charge depreciation. I must be having in fact assets also. I must be having WDV also. All the assets are sold. I don't have any assets, so capital gain would rise. If I am selling all the assets at loss, depreciation cannot be claimed. But sir, in third case, do have assets, but I don't have WDV. In fourth case, I have assets as well as WDV. So what I'm trying to say is you must have assets in reality plus some WDV left also to claim depreciation. If you have anything missing now, if you have zero WDV or negative WDV, capital gain would arise. If you have zero assets or negative assets, then to again capital gain would arise. Got this point? Neha, Clear to everybody? Yes, sir. Three things we understood about assets. Three things we understood. First of all, we came on to what rates we use. Second thing, how do we compute? And third thing, what happens when we sell such capital assets? Fourth thing comes to our knowledge is additional depreciation, and I want you all. Sir, after this depreciation topic, please prepare a rough chart of depreciation like you did in capital gain so that no topic is missed out. Hmm. Yeah, no topic will be missed out. Trust this process. This is a better process. I mean, see, in capital gain, you saw me drawing that chart, so you were able to recall everything. Correct. Nothing was missed out because of that chart. In PGP, I had different method of making you revise everything. So here I don't use charts, but I use a different method which will make you remember everything. Nothing will be missed out, but wait till that process. Okay. You will not forget anything. You will not forget anything. I have different method of making you remember in this chapter. Okay. I'll make you remember after that. And this is more better. This is much better than the chart. Okay, don't worry, don't worry. Additional depreciation. I want you all to draw the skull. So we whatever we see now, we think that is the best. We think that chart was the best, but in PGP something else works, and that I'm going to use after we are done. After we are done with today's session, I will be telling you. Don't worry. Additional depreciation. If you have any book of any author, just draw a dangerous skull in this additional depreciation topic. Why is a dangerous skull? Because you are going to forget. Most oftenly, people forget that additional depreciation is applicable. First of all, I want you all to do a pinky promise. Pinky promise right now that whenever you see the word manufacturing written in the question, you have to write additional depreciation on the top of the question as soon as you read it. Otherwise, you are going to forget. For sure, you are going to forget. I want you all to write it down. To write it down that whenever you see manufacturing business, sir, additional depreciation has to be there. Some or the other way, additional depreciation is the point that is going to be tested. So this is the most important thing. Topic is not difficult, but this is a topic that you might forget very easily. You might not even remember that this is to be done. For that matter, just draw a skull and write this down. Whenever you see a word manufacturing, you will use additional depreciation. Sir, manufacturing, production of any articles including printing and stationery if you do such business, or if you do generation, transmission and distribution of power, then you get additional depreciation. How much you get? Provision says we get additional depreciation of 20% is allowed on the plant and machinery satisfying the two condition. We get 20% additional depreciation. First of all, plant and machinery has to be new. No second hand plant and machinery is allowed. No second hand plant and machinery is allowed. Only new plant and machinery get additional depreciation. Second thing, if plant and machinery are put to use for 180 days or more, then 20% additional depreciation is given. But if it is used for less than 180 days, then 10% additional depreciation is given. Sir, if we do not put to use plant and machinery in current year, no additional depreciation is given. If we put to use plant and machinery next year, entire additional depreciation is given. Sir, to claim additional depreciation, it is not said anywhere, but as per many judgments, plant and machinery has to be used in India, put to use in India, then only you get additional depreciation. Remember, plant and machinery that you install has to be in factory premises. Sir, for office AC, office appliances, can you buy? Right answer is no. For residential accommodation, can you buy? No. For example, many factories have residential accommodations in their factory premises only for their employees. And if those companies are buying ACs for their factory premises, washing machines for their residential accommodations, provision says these are not eligible for additional depreciation. Only machines used in factory are applicable. Sir, if you have any assets on which you have claimed 100% deduction, Section 35, Section 35 AD, if you get deduction on these assets on under these section, provision says you will not be given additional depreciation. Additional depreciation is also not allowed on ships. If you have big ships, allowing 20% additional depreciation on ships is not sustainable to government. Aircrafts, transport vehicles, it is not allowed. But remember, if you have na forklift trucks used in factory, forklift truck used in factory, then it is considered as, then it is eligible for additional depreciation. What is a forklift truck? If you have seen this, picking the goods from here and taking it to some other place. Like fork, we have na picking the goods and keeping it to some other place. These forklift truck are eligible for depreciation, additional depreciation. Otherwise, transport vehicle like car, like jeep, like bus, like van, these are not eligible for additional depreciation. At this point, sir, I bought plant and machinery for rupees 100 lakh. Current year depreciation on this plant and machinery is 15%. That means WDV is 85 lakh. Will I be getting additional depreciation on this 100 lakh or 85 lakh? Will I be getting additional depreciation on this 100 lakh or 85 lakh? Of course, sir. Of course. How can you even think of 85 lakh? Neha says 100 lakh. And of course, everybody would agree that it has to be 100 lakh only. Why in heaven's name, why in God's name, government is going to give 85 lakh rupees? Always understand. Oh my God, Nika says 85 lakh. Honestly, I also thought 85 lakh. When I was a student, I used to always doubt whether it's 100 or 75. But just remember this thing, additional depreciation is always given on the cost of the asset, Karnika. Always additional depreciation is given on the cost of the asset. Always cost. And that too, do we get additional depreciation every year? Right answer is no. We get additional depreciation only in the year of acquisition. If I acquired plant and machinery today, in this year only I am getting 20% depreciation, additional depreciation. Next year, will I be getting? No, I will not be getting additional depreciation next year. Only the year of acquisition has to be taken. That too, cost of asset has to be taken. Clear with this point? Now I have a beautiful point to make. Perfect. Perfect, Harish. Very logical point. Now, during during the calculation portion, I was telling you this thing that whenever you incur any direct expenses like freight, like telecommunication, whenever you incur such expenditures are added to cost of asset. These are added to cost of asset. What all expenditures are added to cost of asset? It is important to understand. Sir, for example, if you have paid any installation charges, if you have paid any freight charges, if you have paid any transportation charges, so that would be added to cost of asset. Purchase price paid to vendor is also, of course, cost added to the asset. Any installation charges, transportation charges is also added. Any trial run expenses are to be added. Any taxes and duties, for example, you have paid custom, that will be added. GST, if you do not get ITC not available, then again it is to be added. Sir, to acquire that asset, you have received government grant or subsidy. Such government grant or subsidy is to be reduced. And last thing says, if you receive if you receive any amount on sale run of the trial run of the product. Sir, for example, I have laid down the plant and machinery for soaps. Now, during trial run, I generated 10,000 soap. I produced 10,000 soaps, and this 10,000 soaps have been sold for 10 rupees. That means 1 lakh rupees I received. 1 lakh rupees I received on sale of this trial run product. Provision says this trial run product revenue has to be reduced from this cost. This will give you actual cost. This will give you actual cost. Point is very simple. The way you used to calculate the cost as per accounting standards is the same method. But one thing to be considered here is if payment is made to single person in a single day, otherwise an account paycheck demand draft electronic clearing system exceeding 10,000 rupees shall not form part of the cost. For example, you paid to somebody else, you paid to somebody for you paid for freight, for example 50,000 rupees in cash. Will that be allowed? It won't be added to cost. If you paid to vendor in cash, sir, it won't be added to cost. So these things will not be added to cost if you paid in cash. I want you all to star this point down. I will refer this point again. I will refer to this point again, but I want you all to star this point right now. So this was the general case. This was the general case as to how do we add to value of the block, how do we add asset to WTV. But can't there be special cases? For example, if I am having an asset which is received free of cost. If I have an asset that was earlier used for personal purpose, can't there be certain special cases in which we might find difficulty as to what amount has to be added to cost? See, of course, the ultimate fight is to find out the amount that must be added to block so that we can claim depreciation. Amount of addition in the block is important. That is what we are studying. So how much amount to be added, we need to understand in these special cases. First of all, if we have an asset which is used in scientific business and now it has come to regular business, just think of it for a minute. If you had used this asset, if you had acquired an asset for 100 lakh rupees, used this asset for scientific purpose, you must have claimed 100% deduction on this. You must have claimed this asset, you must have claimed 100% deduction on this asset, and now again you want to transfer it to regular business and claim depreciation again. Provision says zero will be added to block. You won't get any depreciation. You want to get any depreciation. Any depreciation you want to get. Sir, for example, this is the building of Harish developers. Harish developers. This is the building of Harish developers. Sir, we don't use this accent. We don't use this accent the way you are using it. We don't use it. See, this is Harish developers, and he has developed a building in which he has 15 floors, 15 flats. These don't look like flat, but these are flats. These stocks, these flats are held for these flats are held for sale purpose. Harish developer has a business of developing the flats and selling it. All of a sudden, Harish said he want a luxurious life. So he turned this first flat as their office premise. He shifted his office to this flat number 305. He shifted this office to flat number 305. Can I say earlier this flat was a stock in a trade? Now this flat has been converted into capital asset and that to depreciable capital asset. My question to all of you is what amount would be added to cost to claim depreciation? What amount would be added to cost of a block of the asset to claim the depreciation on this office? Are you getting what I'm saying? Sir, earlier this was stock in trade. I have converted this asset into capital asset and that to a depreciable capital asset. Now I want depreciation on this now. If I am using this for my office purpose, I want to claim depreciation. What will be value I will be adding to block to claim depreciation? What will be the amount I will be adding? FMB or the rate of conversion. Wow! Wow, Anjana. How can you? How can you? Arey Baba, everything is logical. Na. I didn't say anything. You only said na. You only said this thing. Acha, I hope my previous accent wasn't irritating to you. FMB on the rate of conversion. Sir, For example, for example, I want to do business. I wanted to do business. My father saw the dedication in me. My father saw dedication in me. He really wanted me to be a successful businessman. Therefore, he had a flat in Camellias. He had a flat in Camellias. He gifted this flat to me so that I can do business. Rahul did not have any asset to do business. He received a flat, he received a building from his father as a gift to do business. Now, what my question is, when Rahul will be using this building to do business, don't you think that this building would be added to cost? What amount would be added to cost? What amount would be added to cost? My question to all of you. What amount would be added to cost? Are you getting what we are studying? Are you getting what we are studying? Or is it just that I am talking to myself? Or is it something very tricky point? I'm not talking very tricky. This is very logical now. I want depreciation. For that I want to add cost of asset to the WTV. Now what cost I would be adding if I got the asset free of cost? Sir, for example, my father had acquired this property of 100 lakh rupees. He never claimed a depreciation on this asset. Provision says whatever his cost would be taken to me, would be given to me. If he had never claimed a depreciation on that asset, if he had never claimed a depreciation on that asset, that would be added to me. On that would be that I would be adding to cost. But if he had claimed a depreciation, he would have had WDV. For example, he had that WDV 70 lakh rupees. Then 70 lakh would be added. If my father had this property on which he claimed a depreciation, then WDV would be added. If he did not claim depreciation, then cost would be added. This is what this point says now. Actual cost to the previous owner less the depreciation that has been allowed to him. If he has claimed depreciation, then WDV. If he has not claimed depreciation, then actual cost. Arey Papa, this is not something I'm telling. This is something very logical. Now come on to last point. Sir, for example, what if grant and subsidy is given? Provision says any grant or subsidy given to you with respect to asset, it has to be reduced from cost of asset. Beautiful, beautiful Harish. Cost to previous owner. If depreciation allowed to him, then WDV to previous owner. Now, if I have been given grant or subsidy, always reduce that grant and subsidy to the cost of assets. Sir, perfect. If any GST and custom we have paid, what to do with that? What to do with respect to cost? Provision says if we have paid any GST, check whether ITC is available. If input tax credit on GST is available to you, then it is not added to cost. If input tax credit is not available, you have to add it to cost if credit not available. Section 3580, I want you all to hold for some time. Point number 12, asset acquired out of the borrowed fund. What does the point mean? What does the pointer mean? Try to understand, sir. Don't use this accent. Okay, okay, got your point. You remember accounting standards for India's? Can you tell which India's was with respect to borrowing cost? I guess it was 23. Please correct me if I'm wrong. India's 23 talked about borrowing cost. I'm not sure if I'm wrong. Correct me. Okay. Sir, we are aware that whenever we acquire an asset, we use loan, and for loan, we pay interest. Provision says, as per accounting standards or India's, If interest is paid up to date ready to use, it is added to cost. Beyond, transfer to P&L. Perfect. 23, 23. Everybody knows this thing. Thankfully, I also know. I was not aware. I just made a hit and trial. I just made hit and trial. I was not aware which Indias is applicable. What I am saying, if I acquired a plant and machinery on loan, I have to pay interest now. And up to the date such asset is ready to use, such interest is added to cost, and beyond that it is transferred to P&L. Similarly, in income tax, we use the word put to use. Whatever interest is paid up to the date asset is put to use, it is added to cost of the asset and depreciation is claimed on that. And beyond whatever the interest is paid, it is transferred to P&L. That means it is allowed as deduction. It is allowed as deduction. Did you get this point? Again, hold these three pointers. Now, asset acquired with an intention to claim higher depreciation. What does that mean? For example, this is Rahul. I want a machinery for my business. I want a machinery for my business. I went to market and I saw this machinery is available for 1 crore. I said, hmm, oh dear Lord, I want higher depreciation. I want higher depreciation. I want higher depreciation. I want higher depreciation. What I did, I asked the vendor to build this machinery to 10 crore. Build this machinery for 10 crore. On 30th, 31st March 2025, I asked the vendor to bill it for 10 crore. And I asked them after 7 to 8 days, just give me a credit note of 9 crore so that I can record this machinery for 10 crore and claim 7.5%. That means 75 lakh I can claim depreciation. Wow, how much brain I have. I am buying asset intentionally at a higher cost just to claim higher depreciation. And later on, I have intention of reversing it. But this year, I have more profit now, so I want to claim higher depreciation this year. Next year, I will be having less profit, so I will be reversing the depreciation amount. Wow, so much of brain. Provision says, wait, if you acquire an asset with an intention to claim higher depreciation amount determined by the assessing officer with the prior approval of joint commissioner, normally the FMV of such asset shall be only allowed to you for the purpose of depreciation. If you acquire asset at a higher value, assessing officer is only going to give you FMV to claim the depreciation. Strange. Reacquisition of sold assets. Let me tell you what happened. I have an asset. Okay. I have a WDV of an asset, for example, 550 lakh rupees. If I have this asset right now, I can only claim depreciation of 50 lakh rupees. 50 lakh rupees, I can claim depreciation. What I did, I sold this asset. Sold this asset to my subsidiary at 50 lakh rupees and reacquired this asset at 2 crore rupees from my subsidiary only. I just did intraday transaction. Some of my associate, I sold it the asset which was of 50 lakh rupees, I sold it to my subsidiary and later on I reacquired that at a higher price. Can you see the difference? How I am trying to use my brain to get more and more depreciation. Do you think that government is going to allow? Do you think that government is going to allow? Are na baba na, government is never going to allow. Government says two things. Take the WTV at the time of sale or take the reacquisition cost. Whichever is lower will be added to block. Whichever is lower will be added to block of asset. What do I say? What did I say? If you sold the asset and reacquired at a higher price, depreciation will not be given at a higher price. WTV at the time of sale or reacquisition price, whichever is lower is the amount you are going to get the depreciation. Asset purchased and leased back to the same person. Wow. Wow. Okay. Let's see. Let's understand this. For example, this is Rahul. I have profit of 1 crore. I have profit of 1 crore. I was thinking, how do I claim depreciation? 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 I want to reduce this profit. I was crying out loud. I was crying out loud. Somebody suggested me, Rahul, you can buy an asset. For example, there is person named Neha. Neha has machinery of 10 crore rupees. Somebody advised me to buy this asset of 10 crore from Neha, claim 7.5% depreciation, that means 75 lakh rupees, and lease it out to Neha again. In that way, in that way, you neither have the asset, but you will be getting depreciation. Wow, sir, wow. Do you think that government is going to allow you? Do you think that government is going to allow you? Answer this. Do you think that government is going to allow you? Do you think that government is going to allow you? Answer this thing now. Sir, government has to allow this. Government will allow us. Why? You are just looking at one leg of the transaction. You are looking at this leg of the transaction, that I am claiming depreciation. Don't you think that if I would have leased back this property to Neha, then I might be earning lease rental also, no? Lease rental also, no? You forgot that point. If I am leasing it, if I bought this property at 10 crore rupees, first of all, I have stuck my 10 crore. I have stuck my 10 crore. Second thing, if I am claiming depreciation, then I must be earning lease rentals as well. So in some or the other way, it is crossing each other. Therefore, depreciation would be allowed, but it will be only allowed to the extent that we have WTV of the previous owner. Whatever the WTV that Neha has, that WTV I can only claim. If I'm acquiring this asset at a higher cost, I won't be given higher depreciation. I would be given depreciation on that much component only, which WTV Neha has. And for that matter, WTV of the previous owner shall be considered. Oh dear Lord. See, what the point is, if you buy asset and you start and you what do we say? You buy asset and you have locked your money in that asset, now you will be given depreciation, but not at a higher price. It has to be either FMV, it has to be the WDV of your own asset, or it has to be WDV of somebody else. But if you have stuck your money, if you have blocked your money, then you have to get a depreciation. But only limited depreciation will be getting. You won't be getting unlimited depreciation just because you are buying the asset. You won't be given unlimited depreciation. If you see any example, if you bought this asset, you must have blocked your money now, so you get depreciation, but only up to FMV of the asset. If you have already an asset, you sold it for 50 lakh rupees and you are acquiring for 2 crore rupees, even if you are blocking your money, you are given depreciation. In third case also, if you purchase the asset and lease back, of course your 10 crore are being blocked, but still you claim depreciation. You also earn lease rental. You are allowed depreciation. You are allowed depreciation in these cases, but there is a upper cap to it. I hope you got the point. Sir, for example, if we have building used for personal purpose, for example, I live in a house. All of a sudden, I thought, why not to use this house for my classes? So upper portion of the house, I had started using this upper portion of the house for my classes purpose. In one room, I take the classes. The other room, packaging work takes place. Other room, the backend office team takes place. Whatever the backend work is done in the other room. Provision says earlier this asset was used for personal purpose. Now I am using this asset for my commercial purpose. In that case, what would happen? Sir, how much depreciation? How much depreciation on the building I would be getting? Provision says take the original cost of the asset, reduce the notional depreciation till the current year. For example, this building was acquired, for example, 30 lakh rupees 3 years back. 10% depreciation. 10% depreciation, 10% depreciation. This would give nearly into 90% into 90% into 90%. It would give us 21.87 lakh rupees now. I will be getting depreciation on this. Sir, rate of depreciation will be as per current year rate only. What do I mean? If I have been using building for personal purpose, now I bring that building for my commercial purpose, take the original cost minus depreciated value. This is the amount of this is the amount of cost that will be added to my WDV for depreciation purpose. But if any other asset is used, for example, I have this laptop in front of me. This laptop was personally used by me, but all of a sudden I started taking classes. Now, what would be added to WDV? Provision says for all the other assets other than building, original cost is to be added. Original cost of the asset is to be added. Original cost of the asset is to be added. If I had acquired this laptop for 30,000 rupees, 30,000 would be added, 40,000, and 40,000 would be added. For all the assets, we don't minus notional depreciation, but for buildings, we minus notional depreciation. Simple reason being, government don't want to give higher depreciation on buildings. Is that clear? This is how your topic is in case of cost of acquisition. What did I just say? I'm just briefing you out again. I'm briefing you out again. What do I mean? Whenever you pay any money to acquire the asset for installation, for test run, for access, that is added to cost. If you receive any subsidy, reduce it from cost. Apart from that, if you earn any money from trial run, reduce it from cost. This will give you cost of asset. This is normally added. But there are certain cases in which you don't have actually price paid to acquire the asset. For example, if you have asset used in scientific business, now it has brought to regular business. No, nothing will be added to block. If you have a stock in trade, it has now been converted into capital asset and depreciable capital asset. How much would be added? Provision says FMV will be added. If you have acquired any asset out of gift will, then in that case, whatever the cost to previous owner is will be added to block. Or I can say, if the other owner has claimed depreciation, then WDV would be added to your cost. If you acquire any asset at a higher price just to claim the depreciation, provision says in that case, FMV as per AO would be given to you for the depreciation purpose. If you sold the asset and rebought it again, reacquired it again, provision says WDV at the time of sale or reacquisition price, whichever is lower, you will be given depreciation. If you had bought an asset and leased back to the same person, provision says whatever the WDV of the lessor was or lessee was will be used for depreciation purpose. If you had a building used for personal purpose brought into business, then in that case, what would happen? Original cost minus notional depreciation. But if any other asset is brought into business, original cost would be taken. If you incur any kind of GST, then GST is not added unless ITC is not available. If you get any government grant, that is to be reduced. And at last, if you incur any borrowing cost on an asset, remember, till the date asset is put to use, borrowing cost would be added to cost of asset and you will get depreciation. But if such borrowing cost is incurred after date put to use, then in that case, it is transferred to P&L. You are allowed deduction on that. This is how cost of acquisition of an asset for the purpose of depreciation is considered. Till now, what did we understand in depreciation? 5 topics A to E we discussed. First of all was about the depreciation rates. Second thing we discussed about how do we compute depreciation. Third thing we discussed how do we compute the capital gain in case of depreciable assets. Fourth thing we understood was how do we compute additional depreciation. And fifth thing was how do we compute cost of asset for the purpose of depreciation. Coming on to sixth point. If any of the asset is used partly for business purpose and partly for personal purpose, remember only the portion that I have for business purpose can only be claimed as depreciation. For example, if I have a building of 50 lakh rupees. Now building is 50% for personal purpose, 50% is for commercial purpose. So whatever the depreciation turns out to be 5 lakh rupees. Out of this 5 lakh, only 5 lakh, 50% can be claimed for depreciation. It's a simple point. I want you all to hold this point for some time. Anybody having any doubt up to this point? I have small pointers to make. After these small pointers, now our topic will be over. Very small pointers to make. Topic will be over after these small pointers. Everybody who is live, just message me whether it is clear to you or not. I'm asking a beautiful question. Everybody participate, huh? Everybody participate. Anybody having any doubt till this point? Yes, sir, clear. It was 1st Jan 2025. I wanted a very important machinery. I know when summers would come, everybody would want ice cream. So for that matter, I bought a ice cream maker. I imported an ice cream maker from London, which was not from London but from United States. I bought this ice cream maker. This ice cream maker was given to me on credit. This ice cream maker was worth 10,000 $10,000. Full rate in next year. Restaurant. Full dep in next year. Full additional dep. I bought this machinery on credit. 10,000 rupees. At that time, dollar was trading at 80 rupees. As soon as I bought the machinery, I recorded rupees 8 lakh rupees to my block. I recorded this 8 lakh rupees to my block. Oh dear Lord. Oh dear Majesty. What to do? But after 3 months, on 31st March, I was required to make the payment. All of a sudden, the rupee collapsed, dollar gained, and I was required to pay 85 rupees. I was required to pay 8 lakh 50,000 rupees. Oh dear Majesty. 50,000 extra I had to pay. What do I do this of 50,000 rupees? I was forcefully required to pay 50,000 extra. 50,000 rupees extra. Don't you understand how much big amount it is? What do I do of this? So you have English accent also. Of course, every accent you can ask me to call, to speak any accent I can speak. What do I mean? I know it is fake, but take it. What do I do of this 50,000 rupees? What do I do? Anjana says add to cost. Anjana says add to cost. Vaishnav says P&L. What other people say? What do I do? What do I do? This 50,000. Harish says added to cost. Okay. What other people think? What should be done? Very strange point, huh? Sir, we have a point. Any asset purchased, any depreciable asset if bought, na, any gain, any loss with respect to foreign exchange fluctuations is added to cost or is adjusted from block. That means if we have any loss, it is added to cost. If we have profit, that means reduced from cost. This is adjusted through block only. It will be either added if it is loss, it is reduced if it is profit. Point simple. Everybody clear? If it is clear to you, then I can raise your standard and ask more difficult question. If it is clear to you, then I can raise a bit more standard. If it is clear to you, can I ask a bit more trickier question in this context? Understood, sir. Understood. Now tell me one thing. What I did, I bought a machinery on credit at rupees 10,000 rupees. At that time, dollar was 80 rupees. I was very afraid, I'm very coward kind of person. I thought, why to wait? Why to wait? I bought a dollar. I did a forward contract. I did a forward contract. I did a forward contract to buy dollar at rupees 80 rupees on 31st Jan. See, I was very afraid that dollar might increase, dollar might rise up. I was very afraid that dollar might rise up. Correct? Dollar might rise up. I had a fear. So I booked a dollar of rupees 80. When payment date came, dollar fell by 75,000. Dollar fell to 75 rupees. I had virtually a loss of 50,000 rupees. What would I do of these losses in the given case? What would I do the losses in this given case? What do I do of these losses? What do I do of these losses? Sir, beautiful, beautiful, beautiful Vaishnav. I cannot be more happy. I cannot be more happy. Beautiful. Anjana, added to cost and disallow in computation. No. See, of course, this has to be always blocked in brain that any gain or loss with respect to asset is adjusted from block. Any foreign exchange gain or loss is adjusted from block. This has to be always blocked in brain. So of course, this 5,000 has to be adjusted from block. This is a kind of expense. This is a kind of loss that has to be added in cost. Just think of it from the person. Oh, very beautiful, Harish. Very beautiful. Hats off, Harish, Vaishnav. Beautiful answers. Just think, 75 is the value. So ideally, we acquired machinery for 75 lakh, 7 lakh 50,000 rupees, and 50,000 is the loss. But we have already recorded this machinery now, so we will ignore this loss. Ideally, this loss has to be added to block of asset. But while recording the value of the machinery, we have already included this loss now. If I am required to pay 75 rupees, so 75 is the hour cost of acquisition, 50,000 is the loss. So we have already recorded 8 lakh rupees now. So this loss would be ignored. Are you getting this? This loss has to be ignored. Okay, got this point? Neha, got this point? What happens in case of demerger, amalgamation, succession, and conversion. What happens in case? Let me tell you one example. For example, we have with us Rahul Private Limited. Rahul Private Limited. We have with us Rahul Private Limited, which has plant and machinery of 10 lakh, depreciation 15%. On 1st October 2024, Rahul Private Limited amalgamated with Pinky. Rahul merged with Pinky. Rahul merged with Pinky and became RP Private Limited. Oh wow. Now what would happen to the depreciation that these assets have? How do we compute depreciation? How do we compute depreciation? Let me tell you simplest possible manner. Whenever we have amalgamation, then succession, we have conversion, we have any kind of change, demerger, amalgamation, succession, conversion. Always ignore that demerger. Always that ignore such reconciliation. Ignore that transaction. Just assume that this entity is continuing throughout the year. Assume this is continuing throughout the year. If this Rahul Private Limited is continuing throughout the year, how much depreciation can Rahul claim? 1,50,000 rupees. Of course, 1,50,000 can be claimed. Now, this depreciation has to be split as per number of days between the old and new entity. How, for example, this asset was with Rahul Private Limited for 30 days in April, 31 days in June, 30 days in 30 days April, 31 day May, 30 days in June, 31 days in July, 31 days in August, plus 30 days in September. So this asset was with Rahul for nearly 183 days. This asset was with Rahul for nearly 183 days. Yes. ऐसा ही है ना कि it seems like 183 days. Yes, 183 days. So out of this total depreciation, 1,50,000 rupees, 100 out of 365 days, 183 depreciation would go to Rahul Private Limited. This means 75,205 would be depreciation for Rahul Private Limited, and remaining depreciation would go to 74,794 would go to RP Private Limited. Always, 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 always. Whenever we have amalgamation succession, Ivana, it seems like you are watching a lecture a bit late. Okay. What I am saying, what I am saying is, always assume that there has happened no demerger, no succession, nothing has taken place. Assume that nothing has taken place. Calculate depreciation as if nothing has taken place. Whatever the depreciation is turning out to be, you have to divide the depreciation on the basis of number of days such asset is used in either entity. In our case, since asset was in the opening block, it was used for 183 days in old entity and remaining in the new entity. So depreciation would amount to this and this. Sir, what if we had acquired this asset on, for example, 1st June? If asset was acquired on 1st June, then what would happen? 1st June 2024, it was acquired. So it was used for 30 days in June, 31 days in July, 31 days in August, 30 days in September. It was used for 122 days in the new and old entity. But for remaining days in new entity, so in this ratio, this has to be split. So whenever there happens a amalgamation, you have to divide the depreciation on the number of days it was used in old entity and number of days it was used in new entity. You have to calculate depreciation first. For example, this asset in June was acquired for 20 lakh rupees. Depreciation on this would be depreciation on this specific asset would be clearly 15%. That means 1,50,000 rupees. Whatever the depreciation turns out to be has to be split on the number of days basis. For example, if asset is acquired on 1st Jan, so no depreciation would be given to old entity. First of all, ignore the amalgamation, demerger, ignore the succession, ignore the conversion, calculate depreciation, and then divide that depreciation as per number of days it was used in old entity and number of days it was used in new entity. I hope you got the point. Now I have important remark in this case. can I simply say, assume that nothing, no addition has been made. Assume that no addition has been made. Assume that no addition has been made. Opening WDV for Rahul was 10 lakh. Can I say depreciation for was Rahul was nearly 75,205? Closing WDV for Rahul was 924,795. Can I say this? Can I say this closing WDV will become opening WDV for RP Private Limited, new entity, amalgamated entity, 92,475, 795. After this, depreciation for new entity would be given and depreciation would be calculated manually, 74,794. And this will give us closing WDV. It will be 850. So in reality, if you see now, opening WDV is same, closing WDV is same. Only thing difference is, sir, depreciation charge for old entity, depreciation charge for new entity, and that to divide it on the number of days. Sir, what I want to tell is, do you all agree with me that opening WDV for this successive entity would be 94, 9,24,795? This would be the opening WDV for this new entity. Can you all agree with me? Is it logical enough to say that the opening WDV for the new entity is 9,24,795? Can you all agree with me that opening WDV would be original WDV in the old company minus depreciation of the old company? This would give closing WDV of the old company, and the same closing of the old company would be opening for us. Can you all agree with me? Can you all agree with me that whatever the closing was of the old company would be opening for this new RP Limited? Can you all agree with me? Yes or no? Yes or no? Can you all agree with me? Hmm? So we did not get your point. Did you understand that first of all, depreciation for entire year is calculated and this depreciation is split on the number of days, sir. We got this point. If considering just Rahul Private Limited, ignore the new entity, just consider Rahul Private Limited. Rahul Private Limited has opening WDV of 10 lakh, depreciation 75,000, closing WDV for Rahul would be 924. Can you all agree with this point that closing WDV for Rahul Private Limited is 924,795? Can you all agree? Because opening for Rahul was 10, depreciation corresponding to Rahul, depreciation for Rahul was 75,205. Therefore, closing WDV would be 924,725. Yes, this is the only thing that we left ago. If asset is transferred in case of amalgamation, so WDV of the amalgamating company will be cost of acquisition for the new company. In case asset has been transferred in demerged company, WDV of the demerged company would be cost of acquisition for the new company. In case asset has been transferred from 100% parent to subsidiary, whatever the WDV is on the date of the conversion would be opening WDV for the new entity. The thing that we kept on hold was for this purpose only. How do we compute the opening WDV? If I am just a newly made company, if I am a newly made company, say RP Private Limited, I have many machineries that I have taken from the old company now. So what would be the cost? What I would be adding? I would be adding the closing WDV of those respective companies. Whatever the closing WDVs of those respective companies are, I would be adding that to my block of asset and I would be claiming depreciation thereon. Hope you got the point. Now I guess it is sufficient time to take break. After break, we will do the power depreciation in case of power generating business. We are almost about to complete depreciation. It normally takes this much time. Normally, it takes this much time. After depreciation, we don't have bigger topics. We will be able to do things in a very faster manner. I intend to reach at least section 36 to 37 today. We are able to do that. We will be in a very better stage today. Perfect. Break. It is 9:46. You can take break to 10, 10 plus minus 2 minutes for our relation. So this long break, Are Baba, you require break, na? So take it. I normally give longer breaks because I take no longer classes. Na? Okay, have a break. If you have any doubt, leave it in the comment section. I'll see them. I'll reply after the break. So, guys, welcome back. Are you all back from break? Arey Baba, are you all back from break? Sir, of course, we did not go anywhere. We were just sitting here. Sir, no issue. See, before going to break, let me brief you out what did we just study. What all entry cases about depreciation we started off. We started off with the basic premise of tax rates. Then we came on to what rates we charge in depreciation. Then we came on to how do we compute depreciation. Then we came on to how do we compute capital gain in case of depreciation. Then we came on to as to how additional depreciation is considered. Later on, we came on to how cost of asset is added. Then we came on to special other considerations like if you use that asset for personal purpose, if you buy that asset in case of credit, if you have amalgamation, succession, conversion, or demerger, how do we split depreciation? These were the small topics that we have discussed. Moving further in that series, depreciation in case of power generating business. See, initially where I told you that depreciation is allowed to the entities on block of asset system. Similarly, power generating businesses can even opt for block of asset system WDV method. They can opt, but they have an option. Power generating entities have an option. They can either go for WDV, but they also have an SLM option. The way you used to calculate in Companies Act now, counting for every asset or depreciating every asset based on their useful life. Using SLM method, they have an option to account for every asset on the basis of SLM. So normal accounting would take place. The way you used to calculate rates would not be considered based on useful life, rates would be taken. The way you used to add cost to assets, same provisions would apply. Only every provision would apply as it is. So some adjustments would not take place. If you use SLM method, you would not be given additional depreciation. And similarly, sale of such assets when you use SLM method take place differently. When you ASEAN, when you are a power generating company or you are any power distribution or transmission company and you use SLM, then sale of asset take place differently. Different treatment is done. How different treatment is done? Let me tell you. First of all, for example, if you had an asset of rupees acquired for 1,000 rupees, WDV of that asset is say 900. You use for 1 year, claim the depreciation 10% and WDV is 900. What if you sold that asset for 700? Can I simply say we have a loss of 200? Can I simply say we have a loss of 200? Can I simply say we have a loss of 200? Yes, sir, we have a loss of 200. Provision simply says it is considered as terminal depreciation. We would allow this as PGBP. This is considered as terminal depreciation. We would allow this loss as PGBP. This is a business loss. Changing the scenario. If I acquired this asset for 1,000 rupees, WDV was 900 and we sold it somewhere between 950. Don't you think Don't you think we have a profit of rupees 20, 50? Don't you think as per WDV we have a profit of 50 rupees? Provision says whatever the profits we have is considered as balancing charge and it would go to PGVP as well. But sir, if we have acquired the asset for 1,000, WDV is 900 and we sold this asset for say 1,200 rupees over and above the cost. Provision says whatever the difference of WDV and cost is, that would be PGBP only. But whatever the price over and above cost is, that would go to capital gain, and this would be short term capital gain. This would be 200 would be short term capital gain. If you check the answers, you would see the same answer. If your cost was 1,000, WDV was 900, whatever loss, this loss was allowed to you as per PGPP. If you have asset rupees 1,000, WDV 900, and you sold for 950, then whatever the income you had would be gain and taxable under PGPP. But if you sold this asset for 1,200, then whatever profit you got up to the cost, that would be going to PGBP, and whatever the profit you earned over and above the cost, this would be transferred to short term capital gain. So Three things: cost, WTV. Cost, WTV. If you sold below this, whatever the loss you have incurred, this would go to loss in PGBP. If you sold just above PGBP, just above WTV, now whatever profit you earn, it will go to PGBP. But if you sell over and above the cost now, then whatever profit you earn up to cost, that would go to PGBP. Whatever profit you earn over and above the cost, that would go to short-term capital gain. This is how taxation in case of sale of any asset take place in case of power generating business. Anybody having any doubt? Anybody having any doubt? This is not the point worth discussing, but still it is a part of the syllabus. And again, I will be referring this point later on. Again, I will be referring this point later on. Sir, you can proceed further. We allow you to proceed further. You can proceed further. Okay, okay, okay. Unabsorbed depreciation. What this unabsorbed depreciation is? Sometimes it may happen that our profit before depreciation is 10 crore and our depreciation for the year is 15 crore. Sir, I have extra depreciation. Or I can say this in this language that my depreciation is not sufficient enough to use my profit. My depreciation is, I mean, profit is not sufficient enough to set off the depreciation for the year. My depreciation is over and above. I have excess depreciation. Provision says whatever the excess depreciation is, this can be carried forward, and this is called unabsorbed depreciation. Whenever you carry forward this unabsorbed depreciation, this will be carried forward for upcoming years. Remember, whenever this unabsorbed depreciation is carried forward to other years, this can be set off against any head of income. If you carry forward losses now, this losses next year cannot be set off against other head of income. But in case of unabsorbed depreciation, you can set off this unabsorbed depreciation through any other head of income except for salary. Salary, we don't allow any business deduction. So for that matter, any unabsorbed depreciation carried forward can be used to set off any head of income in further year. Second thing, unabsorbed depreciation can be carried forward indefinitely without any limitation period. You can carry forward this unabsorbed depreciation whenever you carry forward the unabsorbed depreciation. For example, we previous at 24-25, we have profit of 10 crore. We have current year depreciation of say 9 crore. We have brought forward unabsorbed depreciation of 6 crore. We have brought forward losses of say 5 crore. Provision says if you have current year depreciation, you have brought forward depreciation, you have brought forward losses. What would be the sequence? Always you have to reduce the current year depreciation. Then you have to use brought forward losses, and at last you have to use unabsorbed depreciation. Only at last you have to use unabsorbed depreciation, and it is very logical. Why, sir? Because unabsorbed depreciation can be carried forward indefinitely now, so it is always logical to use it at last. Use the all the losses which cannot be set off later on, so use other losses first, and at last you have to use unabsorbed depreciation. Sir, it may be possible that last year I was running the business of shoes. I had unabsorbed depreciation. Last year I closed the business of shoes. Right now I have a business of apparels and I am having a profit. Can I use unabsorbed depreciation from the business of shoes with the business profits of the apparel? Right answer is yes. Unabsorbed depreciation can be set off even with the business which you do not hold right now. Even the unabsorbed depreciation does not relate to current business profit. It can still be set off. Simple. Unabsorbed depreciation was this much only. Anybody having any doubt? This was all about the depreciation. Anybody having any doubt up to this point? Up to this point, in this point? No doubt, sir. Section 32 explicitly said about multiple things. Now moving further to next section, that is 33AB. This talks about tea, coffee, rubber business. Provision says tea, coffee, rubber. Big topic, yes. Depreciation is always a big topic. It always takes this much time. 2 hours has to be excluded separately kept for depreciation. If you watch any revision video now, in revision video also at least 1 hour goes to depreciation. One third of the entire session of the PGBP goes for depreciation. Moving further, section 33AB. What this section 33AB is? It is important section. It is a really important section. Why it is important section? Because it has not been tested in exam from many attempts. Once tested, it can really break your nerves. So focus is important. See, tea, coffee, rubber businesses are special businesses. Government has already facilitated benefits for these businesses. What benefits, if I may tell? Whenever you see a tea business now, whatever business income is, on whatever total income is, out of that total income, 40% is business and 60% is agriculture. 60% is already exempt. Whatever, if you are having tea business, 60% of the income is already exempt. If you have coffee business and only you grow and cure the coffee, then 75% is exempt, 25% is taxable. If you grow, cure, roast ground coffee, then 40% and 60% is the taxable and exempt ratio. And in the case of rubber, 35 and 65 is the exempt and taxable and exempt ratio. That means much portion of these businesses is already exempt. Whatever earning you have in case of tea, coffee, rubber business, much of your earning is already exempt. Government gave another benefit. Government gave another benefit. What does it say? If SSC is engaged in business of growing or manufacturing of tea, coffee, rubber in India, then they get an additional deduction. How much additional deduction? They say deposit certain amount to NABARD, or whatever amount you deposit, or 40% of PGBP, whichever is lower, we are going to give additional deduction. You deposit certain sum to NABARD, that amount we are going to take, or 40% of PGBP, whichever is lower, we are going to give deduction. So till when we have to deposit this money to NABARD? Provision says you can deposit this money up to the due date of ROI, or you can deposit within 6 months from the end of the previous year, whichever comes earlier. You have to deposit this sum to NABARD. And where we are going to use this money? Provision says we have to use this money as per Tea Coffee Rubber Board of India says. Wherever Tea Coffee Rubber Board of India says, we will be using this money. Apart from that, we are not going to use this money. So what did I say? Tea Coffee Rubber business, deposit certain sum up to NABARD, take that sum or 40% before 40% of PGBP, whichever is lower, you will be getting deduction, additional deduction. Wow. Similar section we have 33AB, which says if your business is extraction of petroleum and natural gas, if you are into business of extraction of petroleum and natural gas, in that case what you have to do, deposit certain sum to site restoration account of SBI. Site restoration account of SBI, deposit certain sum or 20% of PGBP, whichever is lower, we are going to give deduction. Till when you have to deposit in this case? Provision says you have to deposit it up till the end of the previous year. Here you don't have to wait till ROI, till previous year end you have to deposit. At last, where you have to use this money? You have to use this money for the purpose prescribed by Petroleum and Natural Gas Ministry of India. As soon whatever Petroleum and Natural Gas Ministry prescribe, you have to use this money for that purpose. So two sections side by side, 33AB and 33ABA. AB talks about tea, coffee, rubber business, 40% reduction. ABA talks about petroleum and natural gas business, 20% reduction. These were the differences. Now, what common points we have? Listen to this point very carefully. Listen to this point very carefully. First of all, whenever you deposit certain sum to this NABARD account or site restoration account, can you withdraw it? Of course, you can withdraw it. Can you use it? Of course, you can use it, but only with the purpose prescribed. If you misutilize this amount, that means you use it for some other purpose other than prescribed, it would become taxable. What is meant by misutilize? Sir, for example, you bought plant and machinery for office premises for residential accommodations, would become taxable. Sir, if you bought office appliances, it would be taxable. Computers are okay. Computers are allowed. Computers are allowed as office appliances. It won't be taxable. If you bought any plant and machinery in on which 100% deduction is taken, provision says it would be disallowed. This if you use any if you use the money for any of such asset, it would become taxable. Any money used for these assets would become taxable. Sir, if you withdrew money from NABARD, if you withdrew money from site restoration account and you did not use it till the end of the previous year, provision says it would become taxable. What does that mean? For example, I withdrew money on 1st March 2025. Provision says I have to use this money up to 31st March. I have to use this money till 31st March. If I did not use, provision says it would become taxable. It would become taxable. So multiple things, multiple things. First of all, if I withdrew money, I have to use it in previous year only. And that to use for the purposes prescribed. If I use it, if I misutilize it, it would become taxable. What is meant by misutilization? If I bought plant and machinery for office, if I bought plant and machinery for residential accommodation, if I bought plant and machinery for office premises, computers are okay. If I bought any plant and machinery on which 100% deduction is taken, then buying such plant and machinery would invalidate the deduction. I would not be, whatever exemption that I have got now, whatever deduction I have got, it would become taxable in my hands. Remember, whatever the assets that you are buying out of this money now, you cannot sell these assets at least for next 8 years. And with 8 years, I mean the year in which you are buying, let that year end, and 8 years from the end of the year of acquisition. Not just absolute 8 years, but 8 years from the end of the year in which you acquired the asset. You cannot sell it. Otherwise, whatever the cost of asset, or I can say deduction claimed earlier, would become PGP in the year of sale. For example, you bought assets for 8 crore rupees and you sold it. Now you sold it. Provision says deduction claimed earlier shall become your PGPP. Deduction claimed earlier shall become your PGPP. Provision says if you took out the money, if you took out the money from NABARD or site restoration account, and if you do any revenue expenditure, we will not allow such revenue expenditure to PGBP. We will not allow. Why, sir? Why, sir? Try understanding this point. For example, I had 100 crore worth of profit and I got deduction of 40%. That means 40 crore of the profit is completely exempt now. I did not use it, but it's already exempt. 40 crore is for directly exempt if I'm not using it. I did not spend it. So you want to use this for revenue expenditure and claim deduction again. Already 40 crore has been exempted. Again, you are using it and you want to claim double deduction. Provision says double deduction we are not going to give. Once you keep 40% aside, you can use it for revenue expenditure. Deduction for such revenue expenditure would not be given to you. Sir, clear to us. Clear to us, clear to us. Next point. Sir, if you buy, for example, you had 100 crore of asset, 100 crore of profit. You claimed 40% as deduction. That means 40 crore you claimed as deduction. Of this 40 crore now, you bought a plant and machinery. And now you want to claim depreciation on this plant and machinery. Are Baba, you already acquired property from which income was exempt. You already acquired property from exempt profits. Then you want to claim depreciation again on these assets. Provision says, no, we are not going to allow. If any revenue expenditure is done, it will not be allowed. If any capital expenditure is done, depreciation on that capital expenditure would not be given to you. Oh dear Lord. How do we do calculation in this case? We do calculation first of all, whatever the net profit before 33AB, before 40% exemption, take that net profit. Minus 33AB deduction. Whatever 33AB deduction is, 20% of the export profits or 40% as the 20% of profit, 40% of our profit. Reduce that. Whatever the misutilized amount is, you bought some plant and machinery for personal purpose. If assets sold within 8 years, then add them. If you have withdrew a fund and did not use it, add that fund. This would give you income before division. Whatever the income before division is, you have to split it between PGPP and agriculture income. Agriculture income would be exempt and PGPP would be the given. You have to reduce the losses and this would give you the correct answer. Division happens in this place. I want you all to take a screenshot of this pointer. I want you all to take the screenshot of this format. This format has to be strictly followed to to match your answers. This format has to be strictly followed to get your answer correct. I hope this format is in your concept book. If not, then you can note it down. Honestly, I want to solve a question now. I want to solve a question now, but I want you all to solve it of your own ones. We have a question. Yesterday only I shared Super 100 PDF. Super 100 PDF. In this, we have a question of Gomati Private Limited. Question number 15. This is your daily practice question. You have to solve this question today and send it to me. People are sharing DPQs with me, and if you are not sharing, believe me, you are missing out on something. You are missing out on your practice, you are missing out on your presentation, you are missing out something which can increase your marks to 4 to 5 marks. You can, I mean, 4 to 5 marks, 6 marks can be increased. You are missing out on that. Did you note it down? Did you note it down? Yes, sir. Try solving this. This is a good question. Honestly, this is a good question. And believe me, whenever you are solving DPQ, it, if you are doing any mistake now, if you are doing any solution mistake, if you are doing any mathematical, grammatical, clerical, or logical mistake, it's okay. Whatever questions I gave you, these are not the simple questions that everybody can do. These are not the simple questions. These are trickier questions. So mistakes are bound to happen, and mistakes will happen for sure. Don't worry. The issue, the main concern is that you are able to practice it, and whatever issues you are having, we are able to discuss in the next class now. So topics become simpler in that sense. Got it, sir. Sir, 33AB exemption is withdrawn. For example, if we close the business or if we do dissolution, these are the voluntary acts. In this case, exemption is withdrawn. But in case of liquidation of the company or in case of death of the SSC, these are natural acts now. So in that case, even if we close the business, it is not taxable. Whenever you want to claim deduction under section 33 AB ABA, you have to get your books of account. You have to get books of accounts audited, and you have to furnish a report from the chartered accountant under form 3AC 3AD to the due date of audit. Up to the due date of audit, you have to get this report signed from chartered accountant. Simple point it is. Is there anything special I need to discuss in this? Anything special? Just small emphasis to this, huh? Just a small emphasis. For example, I kept apart 40 crore rupees, and out of this 40 crore, I bought an asset of rupees 5 crore. I bought plant and machinery of 5 crore. Provision says that I have to hold this machinery for at least 8 years. I cannot sell this machinery within 8 years. What if I sold this machinery in latter part? What if I sold this machinery in 5 years? You already said, sir, it will be taxable. It will be taxable. How much will it be taxable? You said, sir, deduction claimed earlier will be taxable. My question is, what if I sold this plant and machinery for for say 7 crore? What if I sold this plant and machinery for 7 crore? Don't you think deduction claimed earlier means 5 crore would be taxable? So I got a profit. What would this profit? Where would this profit go? Don't you think this is an loophole in the law, sir? If I bought machinery for 5 crore and if I am now selling it, provision says deduction claimed earlier will be taxable. So I took only deduction of 5 crore. If I sold it over and above the cost, then what would happen? So 2 crore would go to short term capital gain. 5 crore would go to PGBP. So 2 crore would go to short term capital gain. Beautiful, Anjana. Beautiful. This was all about 33 AB. See, these aren't the topics that you enjoy. I know. These aren't these topics that you are going to enjoy. So pardon me for that, but yes, there are topics. Topics are going to come in which you are going to enjoy a lot. Of course, there will be some topics which you are going to enjoy. Section 35 talks about scientific research and what this section is all about. Either you do scientific research or you donate to somebody who does scientific research. What do I say? Either you do scientific research or you donate somebody who does scientific research. Okay, understanding the case one, where you yourself do some scientific research. Let us assume ourselves to be Cipla. Let us assume a company who does scientific research. How deduction is given to it? For that matter, we need to identify whether Cipla has commenced business or not commenced business. If Cipla is fully operational, it has commenced its business, it is still doing scientific research. Provision says any revenue expenditure done for the scientific research is 100% allowed as deduction. No disallowance at all. Whatever revenue expenditure this Cipla does for the purpose of scientific research, it is allowed expenditure. No issue whatsoever. If into business, already doing scientific research, whatever revenue expenditure is done is allowed. But sir, what if it is into business and it does some capital expenditure? Provision says we will allow 100% of such capital expenditure. You buy machinery, we'll give you 100% deduction. You buy furniture, we would give you 100% deduction. You buy building, we would give you 100% deduction. You buy land, we would not give you 100% deduction. Sir, no deduction on land. Government doesn't allow any deduction on land. You can buy any asset. We will be giving you 100% deduction, but not on land. If you have commenced the business, this is the case. But sir, what if I am into research but I have not commenced the business? Provision says in this case, first of all, wait for the year in which you will commence the business. Wait for the year in which you will commence the business. Provision says consider the year of commencement of business and 3 prior previous years. 3 prior previous year. In those 3 prior previous year, whatever the revenue expenditure for salary and material you have done, we will allow 100% deduction on those materials. Consider the year of commencement of the business. Consider 3 prior previous year. In those 3 prior previous year, whatever the material expenditure we have done, whatever the salary expenditure we have done, that would be allowed to us. Sir, sir, sir. In 3 prior previous year, whatever the capital expenditure we have done, that would also be allowed. But remember, land deduction is not allowed. 100% deduction on revenue, 100% deduction on capital assets, but land is not allowed. If we are into scientific research, what did I say? If we are into scientific research and we have commenced the business, what to do? Revenue expenditure fully allowed, capital expenditure fully allowed except for land. You have not started the business, wait for business to start. As soon as you start business, take 3 previous years, whatever revenue you have done for the purpose of material and salary, that would be allowed. And whatever the capital expenditure you have done, that would be allowed. But remember, you will not be allowed deduction of land in both the cases. This is all about when we do scientific research. But sir, what if we contribute to somebody who is into scientific research? I don't do scientific research, but I contribute to somebody who is into scientific research. Provision says you can donate it to somebody. For example, you can donate to an Indian company who is into research. For example, we are donating to Cipla. If you are donating to any IIT, Indian Institute of Technology, if you are donating to IIS, Indian Institute of Science, if you are donating to any national laboratory for scientific research, provision says 100% allowed expenditure. You can even donate to approved Curie, which implies you can even donate to approved college, approved university, approved research association, approved institute for scientific and social statistical research. 100% allowed expenditure. 100% would be allowed. What did I just say? You can even donate to different people. Whom you can donate? You can donate to Indian. You can donate to any Indian company into research, scientific research. You can even donate to IIT, IIS, National Laboratory, who is into research. You can even donate to approved college, university, research association, and institute who is into scientific research and social statistical research is also allowed to Curie. This is allowed deduction. Remember, whenever you are into scientific business, you are allowed deduction on every capital asset. Whatever capital asset you buy, machinery you buy building, you buy furniture, whatever you buy, you are given 100% deduction. Just imagine if you are already given 100% deduction, why would you be given depreciation? No depreciation is allowed. Sir, for example, I am doing scientific research and I bought a land and building collectively at a price of 100 crore. Collectively, I bought land and building collectively of 100 crore. Now, in this case, what happens? Land is exempt. Sorry, land is not allowed as deduction, but building is allowed. So we have to bifurcate this 100 crore into land and building on the basis of fair market value of this asset so that we get the deduction correspondingly. Building deduction would be allowed, land deduction won't be allowed. Another important point. Sir, for example, in initial starting phases of the scientific research, I have done too much of expenditure, too much of revenue, too much of capital expenditure. What would happen? Provision says you can carry forward this unabsorbed scientific expenditure to multiple years. In that case, its nature would be as good as unabsorbed depreciation, as good as it would be considered as unabsorbed depreciation. Also, for example, for example, one day I donated some money to approved company. I knew that this company is visionary. This company is going to do something very good. I thought of donating my money to this company. I donated even. All of a sudden, that Lakshmi Chit fund got vanished. The day I donated, I received the donation. After 5 or 6 days, company gone, company vanished. No office, no building, no board, nothing. No director, nothing. Sir, what if I donate today and tomorrow institute closes? Or even if not closes, earlier when it was required, earlier when it had license to get the donation, right now license is revoked. What do I do? I have given donation when license was in force, but later on license was revoked. The company shut. What do I do? Will I get deduction? Will I be getting deduction? Provision says deduction granted earlier cannot be revoked. I mean, if you have donated and that entity was in force, had valid license, your deduction cannot be revoked. Your deduction cannot be revoked. Then also deduction would be given. Absolutely, Neha. Deduction would be given. Deduction is irrespective of the entity status as of now. You just have to check the day on which you gave donation whether the entity was in force. If yes, you will be given deduction. Here made donation for scientific research. Just understand this. What is the backend process? What is the backend process? What does this imply? If I am donating to any entity who is into scientific research, that entity is required to file form 10BD, 10BD up to 31st May of the assessment year. In form 10BD, what it is supposed to write? Name of the donor, PAN of the donor, address of the donor, amount of donation. It has to write. It has to file this form. It has to mention every name, PAN, address, and amount. It has to mention in this 10BD form. As soon as this 10BD form is submitted to portal, small 10BE form is generated. 10BE. Each 10B contains the name of the donor. For example, this is respect to Rahul. Rahul's PAN, Rahul's address, and Rahul's amount. This 10BE acts as a proof of donation. This 10BE has to be given to Rahul, and this 10BE would act as a proof of donation that Rahul has paid donation to this entity. Organization submitting 10BD, 10BD being processed, and it generates several small 10BEs, and these 10BEs are nothing but certificate or proof of donation. It's a very simple point it is. Last but not the least, if you had any scientific asset on which deduction has been claimed, if you have any scientific asset on which deduction has been claimed and you sell that scientific asset, provision says either sales amount or deduction claimed earlier, whichever is lower, shall become your PGBP. Sales amount or deduction claimed earlier, lower shall become PGBP. Sales amount or lower, whichever sales amount or deduction claimed earlier, lower shall become PGBP. If you remember, section 33AB says deduction claimed earlier can be PGBP. Deduction claimed earlier is equals to PGBP. But here we have sales amount or deduction claimed earlier, whichever is lower PGBP. There is a difference between the two sections. We must be aware of the difference. Section 33AB and ABA. 33AB and ABA. What does these sections talk about? So chill with these sections now. Chill with these sections. See, I can assume. See, I sometimes feel boring about when I teach this topic. Sometimes they might not be as appealing as capital gain was, as IFOS was, but it is as relevant as them. Are you able to process everything? Are you able to process everything? Yes, sir. Perfect. Section 33 AB ABA says it's beautiful thing. It's a beautiful section. You went to buy telecommunication license or telecommunications spectrum. Yes, sir. What happens if any telecom operator starts its business? For example, when Jio must have started, Airtel must have started, VI started. These license operator had these telecom operators had to buy spectrum from government. They have to pay spectrum fees to the government. Dry areas, yes, some dry areas. When this phase will pass, when we'll start section 35 AD, we'll enjoy this. But only these a few sections are dry. This is the last dry section. Okay, not very answer. Whenever we go to buy telecommunication license, ideally it is an intangible asset that we are buying. We buy this license for 30 years, for 25 years on lease. We buy this license. We pay 1,000 crore rupees, 5,000 crore, 10,000 crore. We pay this much sum. Regularly, these are intangible assets. Are you getting intangible assets? These are. But government never gives you 25% deduction. Government does not give you 25% depreciation on these assets. Government has specifically laid down criteria to get deduction for these telecommunication licenses and spectrums. How deduction is given to them? Provision says any amount paid for obtaining license spectrum shall be allowed as deduction in equal installments. For example, if you bought license for 20 years, you will get deduction for 20 years. Ideally, they could have easily given 25%, but they don't want to give. Don't want to give. They will give you deduction in 20 years. That means 5% nearly they would be giving. If 30 years, then 33% they would be giving. They would be giving less deduction. Are you understanding how government plays? Try understanding this. For example, if license was bought on 1st April 2022 for 10 years, then per annum deduction would be 1 lakh rupees. But if license was bought on 1st September 2022 for 10 years, now remember, if it is in force, if it is in force on starting from 1st September, it would be ideally in force for 11 years because half year this now, half year this year for full years, and in last year half year it would be for some other year. So it would be ideally in force for 11 years. So in this case, it would be deduction for 11 years. The more number of years this license is in force, the more number of deduction, the more number of years it would get deduction. Even if this license is in force for 1 day, you would get deduction for that 1 year also. So license bought has to be divided by number of years it is in force. But sir, listen, what if, what if I have bought the license, but I have not commenced the business. Is it possible kya? Ki I will start a business next year or next to next year, but I have bought the license. Is this possible? Right answer is yes, it is possible. If I bought the license, I have not commenced the business. I will get deduction from the period starting from the date I commence the business till the date license lapses. I have bought the license. I will start getting deduction from the date I will commence the business till the date license lapses. But sir, what if I have commenced the business, but right now I'm buying the license. Provision says till from in this case now from the date of acquisition till the date of expiry of the license, you will get deduction. Acquisition till the expiry, you will get the deduction. Best part of the license. Best part of the license. When you sell the license, when you sell this license, try understanding this. What happens when you sell a telecommunication license? What would happen? For example, you acquired a license for rupees 1,000. Depreciation, or I should say deduction for 1 year is 100 and year end value is 900. That means written down value is 900. What if you sell this entire license for 700 rupees? What if you sell this entire license for 700 rupees? Are Baba, isn't it a loss? License is worth 900 in our books and we are selling it at 200 rupees. That means, can't I say that 200 is a loss to us? 200 is a loss to us. If 200 is a loss to us, then sir, this is allowed as PGBP. This is a loss allowed under section 33 AB. It is allowed as PGBP loss. It is allowed as PGBP loss. Oh dear Lord. What if I am saying license was acquired for 1000, deduction taken 100, and WDV is 900, and I am selling this license for 950 rupees. I got a profit of 50 rupees. This is also PGBP gain. Oh wow, sir. Wow, wow, wow. Wow, chicka, wow, wow. What if license was acquired for 1000, got a deduction of 100, and WDV is 900, and I sold this license for 1200 rupees. Provision says if you sell the license at a very higher price than cost, then whatever the difference between cost and WTVs, this would go to PGPP, and whatever the difference between original cost and sale prices, this would go to short-term capital gain. Don't you remember we have studied this thing earlier also? Can you remember that we have studied this thing earlier also? Can you remember that this thing we have studied also earlier? Can you think of this? Sir, sale of assets in power generating unit. Beautiful, Vaishnav. Yes, 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 sir. In power generating unit, electricity, yes, we studied this. In electricity business, we used to do this. Ah, sir, got this point. Anybody having any doubt till this point? Anybody having any doubt till this point? I have to raise a level higher in this point. If you have any doubt, you can ask. If you don't have doubt, just say clear so that we can raise the standard to a higher level. Sir, whenever we sell license, can you accept this fact that license can be sold in half also? See, if I am having a license, can I sell partial of my license? Right answer is yes. License can be sold half, license can be sold 1/10, license can be sold 1/20th, license can be sold 230. That means some portion of license can also be sold. Some portion of the license can also be sold. What if, sir, what if this was the case where we sold the entire license? We got these answers. These are PGBP loss, this was PGBP gain, and this was PGBP. If we sold the license in portion, then this would have been answered. So if we would have sold the license in entirety, then this would have been answered. What if we sold the license in portions? What if we sold the license in portions? What would happen? First of all, if you sold the license in profit, just think of it objectively. You had an asset of one asset of rupees 100 rupees, and you sold half of the asset for 200. That means, of course, there has to be gain. So in case of gain, answer would not change. If you sold the license even at a higher, if you sold partial of the license at a higher profits, answer would not change. But sir, in case you sold the license at a loss, then answer would change. How answer would change? Try understanding this. In case you sold the license proportionately, proportionate license is sold, but you have a profit. So entire profit would be same. Answer would be same. Answer would not change. Even if you sold the answer, if you sold the license proportionately or entirely, answer would not change. if you have a profit. But if you have a loss, then what would happen? Just think of it objectively. Try understanding this point. I had a license of 1,000, required for 1,000. WDV was 900, and I sold 50% of the license for rupees 700. Don't you think? Don't you think I have 200 of loss? Don't you think I have a loss? But I also have 50% now. So provision says whatever loss that appears, that will be allowed in remaining life of the license. That means you will be getting deduction in remaining life of the license. Oh, sir, what does that mean? If you sold partial license and you have a loss, that loss won't be allowed to a current year. Rather, it would be allowed in the remaining life of the license. Because it is assumed that you have WDV, you have number of years left, you have WDV. Then in that case, you can claim deduction for over the period, over the life. But in these cases, you don't have WDV. Now you have sold the license and you have used beyond that limit. You have used beyond the cost. Then in that case, what would happen? It would be taxable, even if you sold partial, even if you sell full. Answer in gain would not change. Answer in loss would change. Okay, sir. Okay. Sir, we were actually aware about this thing. Whatever you say, however seriously you say, but we were actually aware about this thing. Sir, what if I have a license? I have license for 20 years. I have claim deduction for 7 to 8 years. Later on, I got merged myself with another entity. What would happen to license? Provision says remaining deduction can be claimed by the successor entity. If you have a license and you merge yourself with any other entity, you amalgamate, you succeed, you convert, what would happen? Remain deduction would be given by the any other entity. Also, section deduction 32 on those deduction under section 32, that means depreciation on these license won't be given to you. Ideally, these are intangible assets. You should be getting 25% depreciation, but provision says you will not be given any depreciation. Okay. This is all about telecommunication license. Section 35 ED. This is a good section. Good section worth covering. Section 35 AD, what does the section says? Government has notified certain sections, certain businesses on which whatever you buy, you are going to get deduction. You buy plant and machinery, we'll give you a deduction. You buy building, you will give you deduction. You buy furniture, we'll give you deduction. But we don't buy land, we are not going to give deduction on land. Don't buy goodwill, we are not going to give deduction on goodwill. Don't buy financial instruments, we are not going to give deductions on financial instrument. Apart from this, any asset you buy, we are going to give deduction. Any capital asset you buy, we are going to give deduction. And not just deduction, 100% deduction. 100% deduction. Sir, what are those businesses? I want you all to learn these businesses by heart. Why? Why, sir? Because sometimes what happens is now we are given 5 or 4 questions, 5 or 4 businesses in the question. Sometimes we are not able to recall whether this is a scientific business or a specified business or not. So for that matter, I want you all to learn these businesses. What these businesses are all about. First of all, if you start a cold chain facility, okay. Second thing, you start a warehousing of agriculture produce. Agriculture produce implies, sir, sometimes grains, it can be wheat, it can be fruits, anything which is agriculture produce. But remember, edible oil is not agriculture produce. Sir, edible oil is agriculture produce. Who has ever thought that agriculture can be edible oil can be agriculture produce? The examiner has asked this question multiple times. It has somewhere slipped edible oil also in the question. People tend to confuse. So for that matter, I have mentioned this. Edible oil is not the agriculture produce. You start cold chain facility. You have warehousing of agriculture produce. You lay down the pipeline for natural gas or petroleum. For example, Reliance has pipeline to transport petroleum and natural gas from Dubai to India. They have laid down the pipeline below the ocean. So these pipelines laying down business is also specified business. If you have 2-star or bigger hotel, if you have 100 plus patient bed hospital, if you are doing an housing project under slum redevelopment scheme, if you are aware about Dharavi scheme, this is a slum redevelopment scheme. Dharavi in Mumbai is a slum, biggest slum in Asia. Now redevelopment work has gone to Adani. Provision says slum redevelopment scheme is a kind of specified business. If you are into affordable housing scheme, this is also considered a specified business. Provision says if you are into fertilizers manufacturing, if you are doing business of making inland container and depot. Inland container imply whenever big ships and cargoes go, these ships and cargoes go in a big depots, uh, big containers. These container making businesses in inland container depot. If you are into beekeeping and production of honey and wax, if you are into warehousing of sugar, if you are into slurry pipeline for transportation of iron ore. Sir, what is this business? See, whenever you want to transfer iron from one place to other place, it is the easiest method is to transfer it via making it slurry. Liquidifying the iron and transferring it through pipeline is the easiest method of transferring the iron. Liquidifying here and then solidifying at the other place is the easiest method. Company laying down the slurry pipeline is also a specified business. Next point. So if anybody does the semiconductor wafer fabrication and manufacturing, semiconductor related work, if somebody does semiconductor chips related to manufacturing and fabrication work, and at last developing and maintaining and operating new infrastructure facility. These 14 businesses. Sir, just have a look at the screen and try saying with me. See, try saying this with me. Sir, first of all, cold chain facility. Then we have warehousing of agriculture produce. Then we have cross-country pipeline for transportation of natural gas and petroleum. Then we have two-star or bigger hotels. Then we have 100 plus patient beds. Then we have, what do we have? Slum redevelopment scheme. Then we have affordable housing scheme. Then what does we have? We have fertilizers. We have production of fertilizers. We have warehousing of sugar. We have inland container depot. We have slurry pipeline. We have honey keeping and wax. We have semiconductor wafer fabrication and manufacturing unit. And at last, we have new infrastructure facility. Sir, were you able to recall? I am taking off my specs. I cannot see the screen. Okay, I cannot see the tablet also. I don't know what the thing written is. You just have to see and try to speak after me. You just have to see and speak after me. First of all, sir, cold chain facility. Second, warehousing of agriculture produce. Third thing, cross-country pipeline for transportation of natural gas and petroleum. Fourth thing, the two-star or bigger hotel. Fifth thing, 100 plus patient bed hospital. Sixth thing, affordable housing scheme. Seventh, slum redevelopment project. Eighth, fertilizer. Ninth, beekeeping and wax. 10th, sugar production. 11th, inland container and depot. 12th, slurry pipeline. 13th, semiconductor wafer fabrication and manufacturing unit. And 14th, new infrastructure facility. Were you able to recall? Were you able to recall? Okay, sir, we were not able to recall. Now try to recall. You don't have screen in front. I am taking off my specs again. You don't have screen, you don't have answer. You just have to try repeating after me. Try repeating after me. See, the way I used to learn. See, cold chain is easy. We had two from warehousing. First warehousing was agriculture, the other one was sugar. We had two warehousing. Then we had two for housing development. One was affordable housing scheme, and the other one was slum redevelopment. We used to have this. Then we used to have two separate lists. One was hotels and one was hospital. So seven we had done. Hotels and hospital we had done. Okay. These were easy. Then we have small businesses like we can have beekeeping. Okay, when we had four bigger businesses. If you can recall, four bigger businesses. We can have cross country pipeline for transportation of natural gas and petroleum. We can have pipeline for slurry. These were bigger businesses. We can have inland container depot. We can have a semiconductor wafer fabrication and manufacturing unit. We can even have new infra facility. Were we able to recall? If I did not miss out any, assuming I did not miss out any, were you able to recall? So last attempt to make you recall. Last attempt. I am again not wearing any specs. I am not wearing any specs. I cannot see. Try repeating after me now. Try repeating after me. I want you all to learn at least 12 to 13. At least 12 to 13 you must be able to recall. Right away starting from the sequence. सबसे पहले sir, cold chain facility. Then we have warehousing of agriculture produce. Then third thing we had was cross country pipeline for transportation of natural gas and petroleum. What was the fourth thing? Sir, two-star or bigger hotel. Fifth thing we had was 100 plus patient bed hospital. Sixth and seventh thing we had affordable housing scheme, and seventh was slum redevelopment scheme. These were seven are clear. Now we had fertilizers, we had warehousing of sugar, then we had beekeeping, Then we had slurry pipeline. Then we have, then we have semiconductor wafer fabrication and manufacturing unit. We have new infrastructure facility. And if I'm missing out something, inland container and depot. This was the thing I was missing out. These were the business. Were you able to recall? Neha says thoda thoda. Were you able to recall 12 to 13? Sir, whenever you start any of these businesses, remember, plant and machinery what should be new. Plant and machinery what should be new. Imported plant and machinery, whether new or old, we'll assume it to be new. Whatever imported plant and machinery is, whether new or old, we'll assume it to be new. Even you can have 20% of your total plant and machinery as the second one also. For example, you bought total plant and machinery, new plus old milake 100 crore. Out of this 100 crore, 20 crore can be second hand. Okay. Remember, business should be new and not by splitting or reconstruction of the existing business. Business should be new. It should not be split off or reconstruction of the existing business. What does that mean? My understanding is, for example, if I am having a business in the form of LLP, I thought, oh wow, new exemption came. Why not to change myself to company and get the exemption? Government says no. If you are just reconstructing your existing business, no deduction would be given. Sir, got this point. If you are acquiring any asset on which 35 to 80 deduction is claimed, no depreciation would be given to you. If you buy any asset, if you buy any asset for the purpose of claiming deduction, you always have to buy that asset via banking channel. Any payment exceeding 10,000 rupees in cash would be disallowed. Deduction would not be given to you. That means payment has to be made via account, paycheck, demand of electronic link system. Whenever you have such businesses, calculate profit and losses of such business separately. If you have any loss from this specified business, sir, loss can be carried forward indefinitely. Sir, not just 8 years, you can carry forward indefinitely. But remember, a return of income has to be filed on time. Return of income has to be filed on time. If you delay in return, you cannot carry forward the losses. But if you file the return on time, you can carry forward these losses anytime. Remember, losses from specified business can be set off against the specified business, irrespective of the fact that latter is not eligible for 3580. What does this point says? I will tell you. Just wait for a minute. Provision says, if you claim the 3580, then 80 IA to RRB would not be available and 10AA would also not be available. If you claim 3580, then Chapter 6A Part C deductions would not be given to you. What does that mean? Just let me tell you with an example. For example, we have with us hotel Grand Maya. Oh, ho, 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 ho. Grand Maya. Incorporated 1991. It's a three-star hotel with a profit, with a profit of 5 crore. We have hotel Raj Mohan. Sir, Raj Mohan. This hotel is five-star hotel. Incorporated 2024. Loss 3 crore. My question to you, can I set off this loss from this profit? Can I set off this loss from this profit? Can I set off this loss from this profit? Can I set off? Oh, what's your response? This lag is going to reduce from when we'll have classes on app. No, this lag will reduce. 13, 14-second lag takes a lot of time. Sir, can the loss be set off? Right answer is yes. Can the loss be set off? Right answer is yes. This is a specified business which can claim 3580 deduction. This is also a specified business which cannot claim 3580 deduction because it was started prior to the required date. But does that mean this is not a specified business? Right answer is yes, no, it is specified. Loss from specified can be set off against business of set specified, irrespective of the fact that whether latter is eligible for deduction or not. Getting deduction should not be the criteria of whether loss can be set off or not. For setting off loss, we need to have specified business. It is a specified business, so we are allowed to get deduction. We are allowed to set off. This is what this point says. Loss from specified business can be set off from other specified business, irrespective of the fact that other business, in our case, it was Hotel Grand Maya, it was having a profit. It's set off. Oh, what the other conditions say? See specific conditions for each business. Provision says if you are laying down the cross-country pipeline bit for natural gas and petroleum, remember this some of the portion should be made for available. Some of the portion should be available for use of others. For example, if Reliance is laying down the pipeline till Dubai, then some portion of this pipeline should be given to Indian Oil. Some portion should be given to Hindustan Petroleum. Some portion too should be given to other people also. Provision says whenever you start this cross-country pipeline business, this business should be owned by Indian company or Indian consortium or any kind of board which is constituted under any act. And last thing, project should be approved by Petroleum and Natural Gas Board. Whenever you start a two-star hotel or above, remember operations. If you transfer to anybody, you shall be assumed to carry out the business. What does that mean? Try understanding this. For example, I had a hotel called Hotel Rajashri. I was so determined. I was so determined to run this hotel. This was, of course, three-star hotel. I was so determined that I gave my sweat, gave my blood to this hotel. And after 1 year, I turned out to be 5 crore in loss. I got a loss of 5 crore. I felt, I felt very sorry to myself. I thought this is none of my business. I mean, running a hotel business is not my cup of tea. I gave the operations of this Rajshri hotel to say ITC. ITC have their Ashirwad hotels, so I gave my operations to ITC. ITC's work is to just to operate the business. Okay, I am still the owner. Provision says later on ITC worked well, and ITC just came up with loss of 1 crore rupees. I see ITC just came up with loss of 1 crore rupees. Provision says whatever the losses of this business are will still be given to me, not to ITC, because ITC is just the operator of the business. Real owner of the business is me only. If SSC transfer the operations to other person, SSC shall be deemed to carry on the specified business. Even though I have transferred the operation to somebody, it is assumed that I am only carrying on the business. Whatever the losses are will be taxable in will be allowed to me only. Conditions with respect to new infrastructure facility. What does this point says? First of all, NIF imply any kind of a road you are making, toll road, bridge, railway system, highway project, housing project, related activities, water supply, water treatment, irrigation, sanitation, sewage, solid waste management, port, airport, inland waterways, seaways, and that means big things if you are making. This is called NIF. This business should be owned by Indian company. Project should be entered into agreement with government and central government. First of all, approval is required, and project should be entered into agreement with central government, local authority. Simple point it is. The best part of all, the best part of all, if you are into a specified business, you get deduction at the rate of 100% on all the capital assets you buy, except for land. What if you sold those assets? Whatever you sold that asset, if you bought a plant and machinery, claimed 100% deduction and sold it, what would happen? Provision clearly states, if you sold any asset on which 100% deduction has been taken, what would happen? First of all, any sales amount received shall become taxable in PGP. Any sales amount shall become taxable in PGBP. For example, I had a plant and machinery which was destroyed. Provision says whatever the insurance receipts are there, that shall become taxable in PGBP. Oh dear Lord. For example, if I have a a specified business, and I have another specified business, somewhere I have hotels, other way I have hospital. I have certain assets on which I have claimed deduction. I'm transferring these assets to some specified businesses. Specified business to specified business. Provision says no treatment. If you have a specified business and the other specified business, if you transfer capital assets from first business to second business, no treatment takes place. But sir, what happens when you transfer your assets from specified business to non-specified business? What happens? In that case, you have to see whether you have transferred business within 8 years of acquisition, whether you are transferring such assets within 8 years of acquisition or not. If you are transferring after 8 years of acquisition now, if you have acquired asset, claimed 100% reduction, and you are transferring this asset after 8 years now, what would happen? Provision says you don't have to do, you will not suffer any profit, and cost of acquisition for the non-specified business would be nil. For example, if I am having a hotel which is of 3-star hotel, I have certain beds and I have given this beds to my regular apparel or garment business. Provision says if I am transferring these beds after 8 years now, my PGPP would be zero, and cost of acquisition for that business would also be zero. You don't have to do any tax implication. No profit in my hands, no cost of acquisition in the other hands. This is simple if it is transferred after 8 years. But sir, what if asset is transferred within 8 years? What if asset is transferred within 8 years? How do we compute? Try understanding this with an example. For example, I had bought a plant and machinery on 1st April 2022 for 10 lakh. In previous year 22-23, I claimed 100% deduction. That means 10 lakh I claimed deduction. Now in previous year 24-25, I transferred this plant and machinery to non-specified business. See, if this would have been after 8 years, then no treatment in my hands, no treatment in the recipient's hand. But since it is taking treatment, since this is taking place before 8 years, what would happen? You would compute the WDV, assumed WDV. See, already you got 100% reduction, so you might not be maintaining WDV, but you have to calculate the WDV. Our opening would have been 10 lakh minus 15% for 22-23 would be 1.5 lakh. This would give us 8.5 lakh. For 23-24, 8.5 lakh into 15%, 1.275. Reducing this would give us opening WDV of 7.225. Provision says if you are transferring asset within 8 years, calculate the notional WDV. Take the original cost, reduce the depreciation as if you were claiming depreciation. 7 lakh 225,000 would be the WDV. Tax this WDV. This WDV would become your PGBP. And this WDV shall work as cost of acquisition for non-specified business. Did you get this point? If within 8 years of acquisition, PGBP amount would be amount of deduction claimed earlier, that means cost, minus notional depreciation as if 3580 was never claimed. This would give us 7.225 lakh. This would be taxable PGBP, and the same thing would be added to cost of acquisition. Same thing would be added to cost of acquisition. I hope you got the point. See, what do we do if we have any asset which is used for specified business and we transfer such asset? If we have any asset which was used for specified business and we transfer such assets, where do we transfer? If we actually sell it, tax the PGBP, tax the sales amount as PGBP. If it is being destroyed, whatever insurance receipt you get, it shall be considered as PGBP. If you transfer it to another specified business, no treatment. If you transfer it into non-specified business, that too after 8 years, no treatment. You transfer it within 8 years, that to a non-specified business, in that case, what would happen? In that case, take the cost, reduce the depreciation, notional depreciation, whatever the WDV turns out to be, tax such WDV as PGBP, and that PGBP would become cost of acquisition for the newer entity. Same thing we had studied in cost of acquisition. If you remember, I had asked you to put this point on hold. If 3580 assets are normally nil if sold after 8 years, if sold within 8 years given below. This was all about your 35 AD. Anybody having any doubt up to this point? Acha. If you don't have any doubt, I can create a summary for you all if you are interested. I can create a summary for you all. Sale of asset. In case of section 33AB, whenever you sell any asset on which you have taken deduction, in that case, na, cost of asset would become your PGBP. Under 33, oh sorry, 35, cost of asset or sales price would become, whichever is lower shall become your PGBP. In case of 35 AD, sale value shall become PGBP. Example, deduction. Your cost of asset was 10 crore, 10 crore, 10 crore. Case 1, sold it for 12 crore. What would happen? 10 crore would be PGBP, 2 crore would get to capital gain, short term capital gain. In this case, what would happen? Again, 10 crore would go to PGBP, 2 crore would go to short term capital gain. And in this case, 12 crore would go to PG. Why I am making you write the difference? Because you might get confused if you do good studies. The only people who do good studies can get confused at this point. Person who is just reading from the bird eye view might never get confused from this point at this point. So this is for those who might have doubt in future. This will help you out. Clear with 35 AD. Shall we proceed? Shall we move further? Shall we proceed further? So one thing I want to ask, I'm not sure about this thing. Okay, just personal 1 or 2 minutes I'm asking. Are you comfortable with English language, the language I speak? First of all, are you comfortable with the language? Yes, sir. Are you comfortable with the language? I mean, are you able to understand when I say English, or is it something you want more fluency, you want more heavy English, or you want more lighter English? In case you want to add on, it is of great value. See, English is very subjective for me. I mean, see, people from Kerala has different English. People from Tamil Nadu has different English. People from Andhra has different English. People from Karnataka has different kind of English altogether. Now, so everybody understands different accents. Are you able to understand it well? I mean, is it okay for you? Second thing, are you comfortable with the concept coverage? See, what I mean to say is, uh, I always I always ask for margin. I always what happens is now first 2 to 3 days it takes to understand what type of students are there in batch. If students are of good level now, I raise them to more higher level. I try to raise them at a more higher level. This sometimes require more time, this sometimes require less time, but it depends upon the absorbing capacity of a student. It completely depends upon absorbing capacity of a student, how a student is able to absorb. So for that matter, uh, the level that I am trying to take you now might make you feel that it is heavier concept in a class. Some days we might think that it is getting heavier. So for that matter, we might reduce the number of size we might reduce the size of the class but increase the number of lectures. Understanding this point, it might happen that since we committed 3.5 hours or 4 hours a day, it might happen because of the depth of a topic. We might cover 3.5 hours a day, 3.15 hours a day, or 3 hours a day, but we might increase 1 or 2 lectures. I think it must be okay for you. But as I said, it will be completed within November only, or 2 or 3 days of December. You can be rest assured that it will be completed by then. You can be completely rest assured. Is that clear to everybody? Is that clear to everybody? I mean, if you have any suggestion, if you had any pointer, no, sir, we want to complete as soon as possible. You can take 5 hours classes also. We'll be able to understand. If you have such pointers, I am open to that points. Just if somebody is watching this as recorded, just let me know so that we can proceed accordingly. See, if the students are normal, okay, students are normal. They understand what I say. They don't argue. We go very fluently. Classes never become very heavy. We are able to complete everything on time. But sometimes what happens is now I tend to tell more than what is required. So for that matter, class becomes heavy, and for that matter, we might not complete things for 4 hours. We might have had shorter classes because heavier concepts cannot be accepted too much now. I can only see yes, sir. And what this yes, sir is all about, I cannot understand. Okay, so that's it. See, I know this section wasn't the best section that you ever want to study this session, but of course, I am improving next time. Whenever you will hear this topic, now you will enjoy this more. I am trying to make more of this portion more funny. I haven't been able to do it, but next portion for sure. When we'll start from section 36, now you will enjoy the section to the fullest. We have multiple segments, we have multiple areas on which we can have multiple examples which you are going to enjoy. So I guess that's it from my side today. We'll continue from tomorrow. We'll continue from section 36 tomorrow. We'll be a bit quick. We'll try to complete PGBP tomorrow itself. We have done handsome coverage, 15 to 17 pages we did today, so that's a good coverage, it appears. Let's see tomorrow how far we can go. So guys, that's all from my side today. uh, what I can say, see you tomorrow. See, if you have not enrolled now, you can enroll it today only. Try enrolling it as soon as possible, because if you enroll today, you will be given access to the fast tab, so that tomorrow you can come live. If you have already enrolled, you must have received the access. If not, you will receive by afternoon. Team will share you the link through which you have to download the fast tab. Tomorrow same time we will be having lecture on the app itself. Lag time would be less. Our question answers ability would be more faster, so you would enjoy more in the app. If you have enrolled, well and good. If you have not enrolled, do sharing it with somebody else. If somebody who wants to study in English, do share it with them so that more people can get to know about this batch. At last, do consider the language that you have asked. I am again do consider Do consider the language that you have asked. If the mail that has been received to you specifically says that you have bought Hindi or mixed language, that means it is Hindi. If it says mixed, then you have bought Hindi. It has to be converted. You just have to mail it to Fast Student Care. They will send you English access. Okay. Yes, that's it from my side. Do solve the DPQ. It's a simple question and share it with me. I will be telling what corrections you can do. Yes. See you tomorrow on the app. Also, share it with your friends. If you liked the video, if you liked the class, do like the video, and also comment down on the first lecture that we had, because first lecture is the impression. Many people watch that lecture and think of buying the classes. So for that matter, your comment might enable others to understand the quality of the classes. So if you would do, it would be of great help to me. Thank you so much, guys, for coming. Thank you so much, guys, for having such a great temperament, and thank you so much, guys, for making this session more wonderful. See you guys tomorrow. Bye bye.